All right, here we go. 1 second. And we're off. Okay, futures opened a tiny, tiny bit higher, but we're not really seeing a whole lot going on right now. Not a surprise there. We had that little rebound at the end of the day. 1 second. Streaming. Okay, just getting everything going here. So, had an interesting week. Looked like it was going to be pretty boring, and then the last couple of days, things really crashed. And could have benefited from that actually. I was looking at some things and I ended up not going with it because I was distracted and regretted it afterwards. That's too bad. So let's get rid of this countdown here. All right, let's have a look at everything right now. It looks like, let's see, the SPY or the S&P's up a tiny bit, not too much. The Dow's up a little bit. The Nasdaq's up a little bit. The Russell's up a little bit. Bitcoin's up. It's actually over 30, barely. It's probably not going to stay there. I mean, it's been going down quite a bit. Crude's not doing a whole lot. Gold's popping up a little bit. Oh man, gold actually jumped about what 20-ish bucks real quick, and now it's only up about 10, maybe 5. It's doing that. Let's see, bonds are down a little bit. Copper's not doing much. Corn's not doing much, and wheat is not doing much. Okay, so that was a pretty interesting week. We had some sideways action and then a nice crash at the end of the week. A lot of people's portfolios aren't looking so good right now, which is okay. Uh, mine's not looking great, but that's all right. I mean, that's what we want if we're in a buyer's market, actually. So today was going to be a little bit different. I wanted to use Thinkorswim, actually wanted to use some of the more advanced features and take a look at a few things. There is a feature called On Demand that Thinkorswim has that allows you to see what the market looked like on a specific day. I'm going to open that up a little bit later, and we're going to take a look at what some things were looking like right before that drop. Because man, I had a winner. I really did, and I didn't. I was so distracted I didn't get a chance to do it the day beforehand. And even if I had just bought a little something, it would have been such a nice win. But I was distracted. So it's just not really. It's not really a good time right now. A lot of people are struggling, and that's okay. And that's kind of what I wanted to talk about today. Is I wanted to put things in perspective. On my notes, I wrote a huge market perspective section right there because when we're down like this is the time to take a look at everything in the long term and get a plan going. I think it's time to kind of reset, recoup, and start over because there are a lot of things going on right now and there's a lot of opportunity, but we're kind of being uh, it's the waters are muddy right now because it's hard to see past the fact that the portfolios are down, that everything looks like it's going down. The selling's probably going to last for a while. We haven't really had a market like this in quite some time. So, here, let me flip screens over here. So let's get started. Actually, let me switch this to the SPY real quick, and then we'll flip over to the other monitor. I got to be on display here, so we got to go to primary. Okay, so let's open the E-minis again. Here we go. Okay, so this week. All right, let's get things started here. So this week, we had some sideways action. Where is Monday? Monday's right here. Okay, so it looked like it was going up for a little while actually, and then we had this huge drop on Thursday, or was that Wednesday? Had a huge drop on Wednesday, and then Thursday was kind of a fake out recovery, and boom, another huge drop on Friday. Of course, we did get a nice rebound right at the end of the day, which makes sense. There's a lot of shorts covering, so that'll kind of push things back up at the end of the day on a Friday a lot of the time. But this drop right here on Wednesday and a little bit into the Thursday morning hours was actually caused by some retail issues. And if here, let's open up Walmart. So Walmart and Target were kind of the focus this week. I mean, take a look at this chart. This is Walmart. They reported earnings on the 16th, which I believe was, let's see, 16th was Monday. So after hours on Monday, they reported, or was it before? No, before market. Okay, so before market on Monday, they had a conference call, and they didn't do terribly bad, but they missed a few things. They had some high uh, costs of goods. There was a lot of transport issues. They didn't have everything they needed as far as stuff they were selling in the stores. But mostly they just didn't make as much profit as people were expecting, and that's what tanked it down. Now they're blaming all that on the supply chain, which I believe. I mean, with a company like Walmart, Walmart's one of the biggest companies in the world, and you're going to see what you see with them will carry over into other businesses. And I was thinking, okay, Walmart reports this week and Target reports this week. They are very similar businesses if you look at them. I mean, Target, they pretty much have the same kind of stuff, but Target's more geared to it's trying to look a little bit classier, but essentially they're the same business. So I thought, all right, Walmart reported first. They had a terrible time with their supply chain and getting the goods that they needed. So I would imagine Target, since Target is like a quarter the size of Walmart, they're going to have those issues too. When I saw this huge dump, I expected that Target was going to have some of the same issues. So let's take a look at Target. What happened with Target? That's what happened with Target. Huge drop. Man, they missed hard. Let's see. Let me pull out the sheet here. So yeah, Target they came in with an earnings per share at 219, but the estimate was 307, so almost a dollar below estimates. And last year their EPS at this time was 417. So I mean they're $2 off from last year. But a dollar of share for a company like Target is a huge miss for their earnings. They did okay with sales. They beat the estimates by a little bit. The sales were supposed to be about 24.37 billion. They came in at 25.17, so slightly more on the sales. But they just didn't make that much profit because they had to eat so much cost. Yeah, I mean that's pretty much the theme of this earnings season is these companies are eating a lot of cost. There's some that's getting passed on to the consumer, which is usually what happens when there are price increases. But for right now, a lot of these companies are just eating it because they, number one, need to be competitive, and number two, haven't had a chance to really push everything through as far as their price increases and what they want to do. Now, I would imagine going forward, they probably are going to throw some price increases in there. I didn't listen to the conference call, so I didn't hear, exactly what they said they were going to do about it. But I do know that they and Walmart both guided down a little bit. I also think they may have been downgraded. Let's see if we can find some analyst upgrades or downgrades in here. I may not have news going far back enough to do that, actually. So what day was that? Yeah, it's not going to work. Um, so I thought, oh, here we go. RBC Capital maintains outperform on target but lowers the price target to 239. And let's see another one. Citigroup maintains buy, lowers price target to 188. See, most of their price targets were in the 200s. So seeing these ones that are coming down into the 100s is a pretty big drop. Raymond James lowers it to 205. Let's see, any other ones on here? Target cut to 227 from 294 by Deutsche Bank. Well, yeah, Deutsche Bank. Deutsche Bank is so shady. I mean, they're they've got some weird. I don't know. They're always way overestimating some of the price targets. And it's like, yeah, it might get up that far. And at one time, I think it was. I mean, it got up to 250 at the peak. So I think this wasn't a terribly overblown estimate. But yeah, Deutsche Bank will do that a lot. They'll be way over everybody else. Let's see, Citigroup. Yeah, they went. Oh, so they went to 188 from 274. Oh wow, that's a huge drop. That's a big downgrade. BMO, they lowered to 210. Deutsche Bank, 227. Even though I thought it said it was something else over here. What is? Oh wow, JP Morgan cut it to 188 from 302. And then Stifel Nicholas, or wait, is that what that was? 171 from 261. Yeah, so basically they got a whole bunch of downgrades, which usually will move a stock quite a bit. But when you see a huge drop like this, it's hard to go more than that. So you can see right here. I mean, they reported, and this thing was sitting at like 215, slammed all the way down to 160, and it's been kind of trending down ever since. And what was too bad about that is right here, the day before, I was looking at puts. I was going to buy at least one put just because I thought, all right, Walmart had this, had these problems, and Walmart's market cap is like 300 billion. Target's market cap is about 70 something billion, so they're a lot smaller. And I figured if Walmart, the huge company, is having trouble with this kind of stuff, then Target is definitely going to have trouble. And I was right. I didn't realize I was going to be this right about it, or I mean, I would have bought some really cheap out of the monies expiring that week. I mean, I was looking at there's like 3 days to expiration. I could have bought some contracts somewhere in this level, like the 180. I mean, this would have been like 20, 30 bucks or something. I didn't I expected it like okay it's at 215, maybe it'll drop to 200, perhaps a little bit below. Like I thought in the 190s would be about as far as it was going to go because that's a pretty big drop right there. But no, it dropped 25%. I mean this was really really bad. Um, and actually here's what I'm going to do right now. I'm going to open up the on demand. I don't do this very often, but we're going to do that. Okay. So what was target looking like? Let's switch this to uh, May. Where am I here? May of 22. We want to go back to what day was that? 17th. Yeah, this is 17th here. So yeah, I'm gonna go back to the 17th. And go. All right. So this is what what Target looked like on the 17th, so right before they reported earnings. I already had a little bit of a drop here. You can see this little green dot down here means they paid a dividend. And a lot of times when a company pays a dividend, a bunch of people will dump the shares because that's what they're waiting for. They're waiting to collect their dividend and then they're going to get out of it. So right now this is running as if the market was open. I might have to bump this. No, this is the right day. Okay, so this is what happened right when it opened on Tuesday. So I was thinking, all right, Walmart got destroyed. In fact, let's take a look at Walmart real quick. Yeah, see, Walmart reported they weren't looking good. This is what the price action looked like in the morning. Just a whole lot of red. So I thought, all right, let's get to Target here. Let's take a look at the option chain. And we've got all these options. Let's just open up the weeklies. All right, just the ones that were going to expire that week. It's going to take a second to load here because it has to load all these prices in that are no longer valid, so it's going to take a minute. But there's definitely volume in this option chain. I mean, there usually is on the weeklies. There are a lot of degenerates that want to gamble on Friday, or not Friday, right before earnings or the week of, because you could act if there's a huge move, you can actually make a whole lot of money doing that. Whenever this thing loads, hopefully it'll load soon. We got Grim Barbs. Yo, what was that bullshit? Futures open 9 minutes late. Looked like they opened on time for me. It might have just been the stream that was lagging a little bit. Did it? Let's see. I've got 5 minute candles here. Yeah, a lot of volume though. Oh, it's dropping now. Look at that. Interesting. Oh, you know what? Oh, this is okay. This got flipped over to the other day. That's right, because I'm on ThinkBack. Okay, never mind. Let's see, back to this. All right, so here's what we were looking at on Tuesday or right before Target earnings. So it was sitting there at about 212. It had already dropped a little bit because of the dividend, and I was looking down here. I was thinking, man, I could just buy one of these super cheap and hold it for no reason, just for the fun of it. I mean, right here, look at this. You could have got this for probably like 20 bucks, right? Wait, oh, the wrong way. Sorry, I'm looking for puts. Um, yeah, look at it. So it ended up dropping down to here. I mean, you could have picked something up pretty cheap. There you go. Probably you could have got this one 30, 40 bucks or the 175, right, oh, right there, 26 bucks. Yeah, there you go. Pull the 180 for maybe offer 20, see if it gets cut at that. And that would have been pretty good. Yeah, so I was looking at that thinking like, "Oh, I could just get one of those just for the fun of it, but usually I'd want to go a little bit farther out. Like I'd probably be looking at July at the earliest. Uh, just to save a little money if it doesn't end up moving. But I was expecting like 200, 200, 190, something like that. And I really didn't want to spend this much on contracts. It's a little much for my risk tolerance. I like to do a little bit less. Yeah, the 170 went up like 12. Yeah, it was disgusting. I mean, I was looking at these. My kid was yelling. I was stressed. I had other stuff I needed to do, so I wasn't really, I wasn't able to concentrate very well, and I ended up just not doing anything. And I was looking at these May 20s right here. Let's open this up. I was looking at these and thinking like, yeah, I could just get a little bit of this for the fun of it and whatever. Man, if I had. So let's see. The 180, the 180 contract was let's call it about 35 bucks, right? So let me get this off of on demand here. All right, so we're back to what it would look like. normally. So this is what it looks like today. So as it closed on Friday. And, oh, I can't see those, can I? No. All right, I got to do the. I'm gonna have to on demand it one more time and go to a different date because let's see what it would like. What it would have looked like the very next day. How about that? Go to there. Okay, so the very next day when Target reported in the morning, it's going to take a second for everything to load up. These contracts, 180. All right, it's going to take, these are still the prices from the other day, but it dropped. Let's go to the chart, see if the chart's already loaded. All right, so this is what the chart was looking like after it reported. Man, that's a huge drop. If you think about that one that looked pretty big from the day they dropped dividends, yeah, nothing compared to this. So it was hanging around 220. Then the dividends came out, it dropped down to about 215, and of course they reported, and bam, down to 160. So let's see, are we loaded on these things yet? Yeah, look at that. What did I say? What did I say? That 175 was like, 50, what, 40, 30 bucks? Look at that, $1,000 right there. Could have made $1,000 risking 20, 30, 40 bucks. And I was too distracted to even try it. That's that's a shame. Just get a few of those contracts. Oh man, that would have been so nice. Look at that. Look at how much these things are up. This is disgusting. Tons of volume. You could have gotten out of it. Not a super tight spread. It's about $100 spread, but that's fine. I mean, I'll I'll take whatever. Oh, there you go. It tightened up a little bit down to the about 30 bucks. So that was horrible, man. I think losing sucks, but when you're going to do something and you don't do it and the move happens that you thought, that that kills me the most. That's one of the worst things. So yeah, that would have been nice to come in here and say, hey, look what I got. But nope, didn't get anything. I got absolute zero this week. Didn't do anything except I added to my long portfolio a little bit. I've just been buying shares as things go down. Um, so let's see, how are we looking on the futures right now? Let's get out of the on demand here. Okay, there we go. So yeah, and as you can see for the rest of the week, Target just kind of dipped down. Man, those puts would have been worth so much. I was thinking about getting some right in here. All right, so let's take a look at the markets real quick. SPY. All right, we've got a downtrend on our hands. Last weekend we were kind of talking about that. It's probably going to be somewhat sideways. And for the first few days of the week, it was going up. People were getting real bullish for a bit, and I was thinking, nah, this doesn't look good. And then Walmart and Target reported, and they basically tanked the market. I mean, there's some other stuff that happened too, but those two retailers freaked people out. And plus, they're both heavily weighted in the SPY and pretty much any of the indexes that they're in. So they pulled everything down, and I mean, there was some other stuff going on too, obviously, but that was the big factor. They were pulling that down. What were we at? Like 400 level. Now we're in the 390s. I mean, if we didn't have that bounce at the end of the day, it would have been around 379. Which, these are common. When you see these huge moves, you're going to see some end of the day changes just like this. Like this is very much to be expected. I'm using a 30-minute chart right now, so let me dump that down to maybe like a 5 minute or something, or 15. Let's do a 15. Okay, that looks a little better. So yeah, the last hour of the day it was a nice little pump, but it was pretty much all down except for after hours trading. And that's to be expected right now. I mean, we're waiting for interest rates right now. The big story is the fact that next month we've got another interest rate hike. And it's supposed to be 50 basis points. But that's the thing. I don't know if it's going to be. There's a lot of chatter about maybe a 75 basis point cut, and who knows if they could even go up to a whole percent, which would be a little extreme. That would spook the markets if they did. I think even a 75 basis point hike would spook the markets a little bit because the plan is 50, and if they stick with the plan, then things continue on. But if they deviate and it's a little bit more dire than you think, the markets could freak out. So we got to watch out for a little bit. Um, All-time highs by August. That's possible. See, we have to see what happens with inflation. With this next hike, they're going to give us an update on how everything's going. They've got their bond selling from their balance sheet. They're trying to unwind the balance sheet a little bit. That's supposed to start next month. I think they're doing like $90 billion a month. That's going to be a little bit more supply thrown back into the market, which will push things down. But I mean, it's going to be pushing down more on the bond market than on the stock market. So hopefully that'll be bullish for stocks. You never really know, but it could be. So all-time highs by August. So what do we have? We're in May right now. We've got the June hike. And then the rest of them were supposed to be 25 basis point hikes. But if we get to June and they say, hey, we're going to go a little harder, then we may not hit all-time highs by August. It really depends upon the Fed. Like right now, it's all about the supply chain and the Fed. I mean, they're trying to stamp down inflation. They didn't act soon enough, so now they're trying to play catch up, which is kind of dangerous because it means you're going to have to push rates up higher than they need to go, which means the market will drop as that happens. Here, let's go to the chart here. So it's pretty ugly. I mean, this is the entire year right here. These are weekly candles, and you can see for the past 1, 2, 3, 4, 5, 6, 7 straight weeks, it's all been red. We've just been going down. We only had the one pump after the original interest rate announcement. Then we had the downtrend at the beginning of the year that was a little bit volatile, but this is clear that we're definitely in a bear market. I mean, the highs were 479. We'll just call that 480, and we're down to 389. So we're almost down 1,000 points on the SPX. In fact, let me switch over to the SPX so we get a better number. Okay, I was messing around and throwing some Fibonacci levels in there last night. So you don't really have to pay much attention to those. But it is really interesting if you look at how, because I went all the way back to around the beginning of the dot-com boom. Yeah, 1994. That's about when the dot-com boom started. So I thought, all right, let's see if we go. This is weekly. I actually want to put this on quarterly. So I want to take a look at every quarter. Where is it? There it is. Every quarter going back. That's what we did. So yeah, the 90s, we had right around 94, 95 is when the dot-com pump really started. I mean, you could take a look at that. Look at all these green candles. I mean, from 1994, or right there, the first candle of 1995, all the way up until mid 1998 was nothing but green candles. I mean, that's a nice clean bull market right there, and you can see what they were talking about because this is when people were starting to get into trading from home. The personal computer was still new to a lot of people. The internet was brand new to a lot of people, but it was allowing anybody to just sit at home and trade, which had never happened before. I mean, unless you had access to special equipment, like in the 80s when this stuff was kind of coming in. But now it kind of democratized it and went all the way up. And look at where it bounced off. I mean, I put this fib level from the all-time highs down there, and it everything's matching up pretty well on this. I mean, it bounced off this 23% level, came down, did it again, and we had the great financial crisis. So we have the dot-com pump, bounced off the 25 level. Um, and then it came down to the 50. Is that the 50? Yeah, the 50 quarter moving average, and bounced up again, came down, and we've had this extreme bull market ever since. So here's what I wanted to talk about today: the fact that everything's been going down. It's hard to see things clearly when you're upset about your portfolio. But we need to look at things in the long term. I haven't really been paying as much attention to the bull or the bear market as everyone else because to me it's kind of a boring bear market. It's not really going down quickly. I mean, the last two that I've been through were very fast, very volatile. This one's kind of it just seems like normal trading to me. Like we've had this really long bull market since the pandemic, and everybody that's new in the markets has only seen. Look at this. This is by quarters. Only seen green candles. Every quarter has been up since 2020 or since like March of 2020. It's all been green candles every quarter until the last two quarters. So the first half of this year has been red. And there have been so many traders that came in late 2020 and early 2021. I mean, that huge push in the market was because all these new traders were coming in and new money was going into things that hadn't had it before. And there were a lot of people that were buying things they didn't understand. And things were going crazy because you could just buy anything and go up. I was seeing videos on TikTok that were going, "Oh, just buy anything that's going up, and when it stops going up, sell. It's that easy." It's very arrogant, but it's also ignorant. They really don't know what the market is like. I mean, the reason this was happening is because we had an environment where it could. We had really cheap money. We had the Fed buying everything, buying junk bonds, which they had never done before. So any company that was in trouble could just say, hey, I'm going to sell junk bonds to the Fed, and then I'm going to use that cash to fix my business. So all these companies that should have failed were able to stay because of that. And that pumped everything up, the good companies and the bad companies. I really wish the bad companies had just gone away because then the market would be a lot better. We wouldn't have as many problems. That money could have been moved over to other things that are actually healthy, but it didn't. Everything just pumped again. So now we're seeing the consequences of that when we hit these all-time highs. Money's coming out of the market because interest rates are going up. So the people borrowing money aren't going to be able to get it as cheap. And that's the key right there. I mean, these pumps come from these huge investment banks borrowing ridiculous amounts of money cheaply and then buying back stock or putting it into whatever positions. A lot of it goes into the derivatives market because the derivatives market is massive, and that'll all play into how things pump. So everybody was, all they've experienced is up. They've never experienced any volatility like this. Like when I started, it was volatile. This is more like what it was when I started. So to me, this is a little bit better. Or I mean, not a little bit better. It's not a scary thing. It's like, okay, this is what the market does. We've had all this up. It's about time that there was a correction. Other people don't understand that. So they're freaking out, they're selling, and that's exactly what I want. I want this bear market. I mean, we've finally gotten it. Like, so this right here is going back, until what, about 2011 or so. Let me go ahead and get rid of these fib levels real quick. They're kind of in the way. Okay, so now we can get a clearer picture of this. So right here we have the pandemic drop. If you look at it, it was only one quarter, right? One quarter, and it was a pretty big bounce towards the end of the quarter. I mean, it opened up here around that 3,200 level, kind of traded up, and then slammed all the way down to the 22. This would have been, the end of March when the pandemic was at its lowest, and then boom, just took off right there. But look at how much of a drop that was. I mean, if you look at this candle right here, so that's about 1,000 points. And then you look at these two candles up here, so 48 down to 30, 38, that's about the same amount. That's 1,000 points. So the pandemic drop, which seemed a lot crazier than the one that's been going on, is actually about the same. This is a huge drop, but it doesn't feel like it to me because it's been so slow. I mean, if you think about it, this is half a year's worth of trading action, whereas this is a quarter. And I mean, only part of that quarter was going down, the other part was going up. So let me switch this back to, let me go to monthly, get a little better idea. Okay, so that makes it a little easier to understand. So now we can see the pandemic drop here. It was a couple of months, didn't look so good. February and March were awful, but there's a nice bounce, and then it went up. So what I'm looking at today is the fact that we've got this huge, huge bull market, and it's really easy to just see this little piece of it right here. I mean, everybody's been talking about how far their portfolio is down and how you know how it's stressing them out mentally. There's a lot of people that are giving up. They're just saying the market's a scam, which is exactly what we want. We want that money to leave. Because the thing that pumps things up is when the money comes back in. People need to get excited after moves have already happened in order to add fuel to the fire. So we're letting them kind of we're letting the fuel build up a little bit, and that's what we want. So as much as it sucks, just remember this: like zoom out on the S&P and think like, okay, this isn't actually bad at all. We don't get these opportunities very often. I mean, this is going all the way back to 1999, and look at how many downtrends you had. You got one, two, three, four. Those are kind of five, six, seven, and eight. So basically eight. But if you only count the big ones, one, two, 3, 4, 5. So in the past 22 years, 23 years, you've had five chances like this. Think about that. All right, yeah, your portfolio's down, but you've had five chances to get into stocks at these levels. And we may not be done. This could keep going. I really hope it does because the lower it goes, the better it is to buy. I mean, everything's looking really good. So what are we looking at level wise if it does keep going? Which it's not, I don't think it's going to go straight down like it did the other day. I think it's going to keep doing what it has been, where it's going to go sideways and sort of like trend down over time. I mean, I could be wrong. It could have a huge drop if some news breaks, but as of right now, if everything stays the way it is and time just kind of goes on, we're just looking at kind of a gradual degradation of the trend. So we've got as far as levels, right now it's kind of bouncing off of this little congestion area right here that we saw at the beginning of 2021, which makes sense. And if actually, let me put the fib level back on here. How did I do that? I don't remember exactly. These are channels, Fibonacci retracements. There we go. So let's do a fib retracement. By the way, I don't put too much stock into this stuff, but it is interesting to do this once in a while. So let's go like that. Let's go back right here to the beginning of the dot-com bull market, or maybe let's bring it up. Let's try to get it to bounce that double top right there during the great financial crisis. Let's do it about, let's call it right about there. Okay, so these levels kind of coincide with congestion levels. So what we're looking at is if it keeps going down somewhere around this 3,200 mark, this is a nice little congestion level because you can see right before the pandemic drop, we had this little this little area where it was kind of consolidating, and then once it started to come back, we had that same area right here, and you can see where it kept bouncing off this spot. It hit this as resistance first, and then once it passed it later, it bounced off of it. So this is a good level to look at. 3264 or so. Let's just say 3200. We'll call it the 3200 level is a nice little spot to look at. Also the top of this, so 35. So we're looking at that 3500 level if it keeps going. But you can see with this green trend going up, there wasn't a whole lot of resistance, and I don't see volume on the bottom of this. I don't know if I have that going on there. Let me see if I can get volume really quick. Is it equities, show volume, subgraph? It should be on there. Okay, well, never mind. Might not be doing it over monthly or something like that. So let me switch to weekly. If I can do that, it might have the volume on there. No, it doesn't. No volume. Okay, well, never mind. I'll just deal with that later. Um, but the weekly, here, let me go back to the monthly just so we can see things a little bit better. Yeah, that monthly's looking nice. Okay, so yeah, that 3,500 level is a little spot. The 3,200 level is a spot. And then when in here where things were really volatile through like 2018, 2019, there are a whole bunch of areas that could be support. When you see something like this, it's harder to draw a level. Like right here, you could probably draw a line. In fact, let me switch this out. So let's delete this one more time. I'm going to do some price levels this time. So take this one. I gotta actually switch to the other mouse and delete this. It's just in the way. I don't like a bunch of stuff all over the screen. It's really difficult to see things sometimes. So I like to go with, oops, not text. That's not what I'm looking for. Price levels. There we go. Okay, so yeah, let's call it this one right here. Call that a level. Oh man, that's really dark. I need to make that a little bit lighter, don't I? Yeah. Let's go here. Let's change the color to something like, yeah, this bright yellow. How's that? Let's have bright yellow. Boom. That's a little too bright, but hey, whatever. We'll dump that later. Um, so let's do that. Okay, go back to price levels and add another one. So another one would be right here, this 3,200 level. Oh man, I gotta set that as default or something so you can actually see the thing. I used to set things really dark because I would have the monitor dark and I'd be looking at things at night or early in the morning. I mean, I'm on the West Coast, so the market opens for me at 6:30. So I'm either like studying things at night or looking at things in the morning, and I want everything dark. So I set the default to extremely dark. Let's save that as default, and then we'll just delete this other one here, and we'll get one more thing. There we go. Okay, so there. Boom. There we go. So there's a little channel that we could be looking for. So right now we're kind of hanging out at this 3,900 level. We've got not a whole lot of resistance down here to the 36, and then not a whole lot of resistance down here to the 32. And then we've got a bunch of, let's see, this 29 kind of area. Well, I'll call it 3,000. So the 3,000 level, which is a round number, and there will be a lot of times that price will bounce off of round numbers. This is another area that I think it could go if it keeps going. But once it gets to this point, it's going to start getting tough to go lower because you have so many shares that traded hands in here. Right, we got the pandemic drop, we got the 2018 drop, we've got the volatility when the trade war started at the beginning of 2018, end of 2017. And right before that was just a huge pump because we had, see, 2015, 2016 got a little choppy because there was an election coming up. And then after the election and everything was done, the market didn't have any worries, so it was able to go up for a good year and a half. And then the trade war came in. And that's kind of what started this volatility right here. We had trade war, we had Bitcoin finally crashing. There were a lot of things that were culminating. They were bringing up interest rates way too fast. And the end of this year right here, that's what caused this drop. They brought interest rates to like 2.25 or 2.5%. Over this year, they had jumped it up like I think a percent and a half or something in a year, maybe a little more than that. And the market didn't like it; it crashed. So right here, they lowered interest rates. They cut them down to like 1.5 or 1.25 or something like that, which then appeased the markets enough to start going up. But of course, there are still stuff coming up, and there was still volatility in 2019. So right here, it would be a lot harder for the price to crash through these levels. I mean, plus you're starting to get into the moving averages, and these are monthly moving averages. In fact, let me switch it to the weekly real quick so you can see the weekly averages. All right, that's a little better. So the 200-week moving average is down there at like where's that at? About 34.72 or so. And you don't get a crash through the 200-week moving average very often. I mean, if we back up and I highlight the moving average, you can see that during the dot-com crash and the recession of 2008, it pounced through it for quite a while. I mean, the dot-com crash, it was below the 200 for 1, 2, 3 years, right? And that didn't bottom. It started in looks like about 2000, and it didn't stop until the beginning of 2003. So that's a pretty long bear market. And actually, that looks a lot more like what we're going through right now. We had this kind of run up like we did in the 90s, only this was much crazier now because we had way more money. In the 90s, the interest rates were much higher. I mean, we had interest rates at about zero point zero 0.08 or zero point zero 0.05, I think was the lowest. I don't really remember exactly, but that's ridiculous. That means that the higher ups are borrowing money at such a cheap rate they could pump the market with it. So yeah, when you look at the 200-week moving average and you get below it, that is time to really buy. I mean, look at this. If you were buying through these 3 years of a downtrend, you did really well. And yeah, it crashed again in 2008. But if you bought in here in 2008, I mean, you were even better off. That was a wonderful time to buy. I mean, people were panicking though. So if you're in the market, you probably weren't. You were probably buying during this top part if you were there. And then once it really picked up, you're out of money or you're scared to buy, which happens even if you know what you're doing. Um, so yeah, but you would have had a great opportunity. I mean, and that's what people were thinking. They thought, the dot-com crash was bad, and now we had the housing market crash, and all the loans were due that people couldn't pay. So people thought it was over. Gold was going up. The fear was causing everybody to get out of things to the point where very few were actually buying. And the ones that were didn't have much money left. But if you had, man, you didn't get a chance to go below the 200 for quite a while. Right before it looks like what is that 2015, the beginning of 2016, it just bounced off that 200-day moving average, which is, you know, which is also an opportunity. Um, so yeah, if you get a chance to get under that thing, like in 2020, man, look at that, you could have made out so well. But right now, we still have a ways to go to even get there. I mean, it's got to punch through these price levels right here, or that first price level to get to it. And then if it goes even lower than that, we're still above the median for the standard deviation channel. Now, a standard deviation channel is one of the few things that I actually like in regarding technical analysis because it so many times you'll see uh, prices bounce off levels almost exactly. I mean, if you go up to let's see, so we got the median, one standard deviation, and two standard deviations. You can see right here, right before the pandemic drop, it literally bounced right off that. I mean, it poked right above it and boom, shot down from that two standard deviation mark. So we're still well above that. We're just below, so we're like 2.5 standard deviations above where we should be based on the average trading over, however many years. So we're still way up. And the whole point of this is to tell you that like even though it sucks to see your portfolio looking like crap, and it's really difficult to make decisions when everything looks like you buy something and it keeps going down, just do that. Just be happy. Be like, all right, good. I'm getting it better next time. I put a little bit of money in this month, put a little bit of money in next month. Whatever you can do, just got to move on it. So spirits need to be up, even though they're not. Keep in mind, this is where we want to be. This is a wonderful thing. We've had this really unhealthy pump for so long. We needed some consolidation for the market to repair itself, basically. It can't keep going up forever. And the more it goes up, the harder the crashes are going to be. So the fact that we've had this relatively slow bear market crash is really nice. I was actually expecting a way faster crash. So the fact that it's been so slow tells me that this is very healthy. I mean, if you watch financial media right now, they're all talking about how terrible everything is. And I was watching CNBC, which is kind of the worst. And they were saying that, they think Powell needs to jack up rates even more than he says he's going to. They said it needs to happen now. Otherwise, there are going to be more problems, which, is kind of true, but it's also a little bit of fear mongering. So I don't put too much stake into it. Let's go here by the dailies. So we're going to see a lot of craziness leading up into those meetings. So let me see. Let me open up I got to see what day the Fed Let's see, conference June. Let's see what day the Fed is. Let's bring this over here to this side. What do we got here? So June 14th and 15th, and that would be, let's go to next month. So that's going to be a Tuesday and a Wednesday, which is normally what happens. So Wednesday, which would be the 15th, is usually when the rates are going to come out and when Powell's going to speak, which is funny they picked that day because that's the day the short data comes out too. So unfortunately, you're not going to get any of the stuff that happens on that day in that short data, which is too bad because I would really like to know what happens after he speaks. But we'll have to wait another 2 weeks to get that data because they release the short data in the middle of the month and the end of the month usually. And sometimes it's a little late. So you'll think like, all right, it's the 30th. I'm going to get the data and it won't be available for another few days. So don't expect it to be there right away. But that's an important day. See, that's what we're waiting for. So June, we know there's going to be at least a 50-point basis rate hike, possibly more. July, September, November, they were talking about 25s. I don't know if they're going to be able to do 25s. They're probably going to have to move a little faster than that, which is probably going to spook the market. So this was our goal, getting through May and June, and then the rest was supposed to be smooth sailing. But because things have changed a little bit, the rest of this is unknown. So let's see. We've got these two, and then we would have had August and September. September is usually a bad month anyway. September is when uh, the end of the fiscal year for the United States government and a lot of other institutions ends up happening. Um, so there's a lot of repositioning of contracts. Who's going to get the contract to rebuild the roads or build this, I don't know, whatever project they're going 5G, etc. Um, so you see a lot of that. And also September is just bad because a lot of traders kind of leave sometime in the summer and then they come back for the last quarter of the year to get the holiday pump. So that's when you normally see a little bit of a decline anyway. So we've got June is probably going to be quiet up until June. Oops, I didn't want to do that. And then we'll have to see what they say about July to see if we're going to get a pump after that. Because we could have a pump after this if they come out and say, oh, we don't even need to do the 50 basis point hike. Things are looking way better than we thought. That would be extremely bullish. Then you would have a nice run. But I seriously doubt they're going to do that because there's still so much uncertainty. There's Ukraine, there's supply chain, there's different diseases going around right now, not just COVID. So there are some pressures. Whether any of those are going to pan out or not, I don't know. So we'll have to see what they say about that. But that's what I'm waiting for. I'm waiting for their June. You see the star that's right next to it. That's going to tell you that it's associated with economic projections, which is what people are waiting for. So really, we're going to get a rate hike here, and then July we may not get anything, or they may have one that they just preload. Um, because I don't think they're actually going to do anything in July, but so September would be the next one that they actually move on. So this will tell us right here. So what's the date today? It's the 22nd. So we got a couple of weeks left until this happens, and once this does happen, then we'll have a better idea of when the pump could come. But my guess would be that they're gonna probably hit this a little harder than expected, and they might hit this one a little harder than expected in September. If there is a rally, I would expect the rally to come in the third quarter, or I mean the fourth quarter. So like October, November, December kind of area. If there's a rally then, we might. I mean this could just drag on for an entire year. If you look at the past, I mean we've been so lucky with some of this stuff. I mean if you look at this, let me switch this back to monthly here, and let me get rid of some of these lines because they're extremely distracting. It's bright yellow all in my face right now. There we go. If you look at the downturns for the past, you know, decade, we have only had a matter of weeks to do anything. Like look at the pandemic. It's 1, 2, 3, 4, 5, 6 weeks. You had 6 weeks to get in on that drop, and I mean you could have got in on the rise and it would have been just fine. But for the most part, you only had a few weeks to get that. And then the same in 2018. I mean, you had the drop and some uncertainty in the drop. That was, a couple of months maybe. So everything's been really, really quick since the financial crisis. I mean, the financial crisis took about a year and a half, let's say, because there was some uncertainty up in 2007, and then the huge drop in 2008 didn't start rebounding until 2009. So there's a good year and a half. You think look at the dot-com crash. That's 3 years. So the market can take a lot longer than you think. And if you go way back in the past, like I was actually going through the history of this entire thing last night, and I was looking at the Great Depression, right? You look at the Great Depression, the peak in 1929, that took 1, 2, 3 years to crash. And then it looked like it was recovering, but it kind of went sideways for a decade. Like can you imagine a decade of sideways action? We haven't seen that in our lifetimes. I mean, people that traded during this time must have thought that everything was over and it was never coming back. Because I mean, 3 years of a downtrend and then a bull trap for 2 years before everything crashes for another decade. I mean, that's difficult on the psyche. But once you start getting into the 50s, things really start taking off. I mean, the 50s things went crazy, and then the same with the 60s. But that kind of the same pattern happened. If it dipped below the 200 moving average, you only had a matter of weeks to grab it before it was up again. And then you had a few years to wait, and the same thing. So what is this, 1966? So yeah, we had a dip in 66 below the 200 for, let's call it about a 2 months or so, and then you had to wait another 3 or 4 years to get it again. So the fact that we've had these quick dips is relatively new. I mean, if you look at it's ever since the great financial crisis when they pumped a whole bunch of cash into the system. I mean, they started the thing that we're doing right now. Well, they started it way earlier actually, but they during this crash was when they printed more money than they ever had in the past. I mean, which is exactly what we did now. I mean, they took interest rates to almost zero. They printed a whole bunch of money, and that alone is what caused things to move up. Well, I mean, not that alone. A lot of things actually moved it up, but that was a major factor in bringing things back. And since then, you've had so little time to actually grab it. So I'm looking at this, man. If this keeps going down and my portfolio tanks even more, I'm going to be happy. The lower it goes, the happier I am. That's the mantra you want to remember right now. The lower this goes, the happier you are. Okay, and I mean, don't go crazy buying things. All think like, oh, we got to get this now, because if this lasts for a year or 2 years, you don't want to throw everything you have into it right now. I don't necessarily think it's going to last that long. I think we have way too much upward pressure in other areas to keep it down for very long. I think it's just the uncertainty and the fact that we've had so much upward movement that we need time to reconsolidate, and that's what we're getting. So this is really nice. Like I said, in the greater context of things, we're still way up. We're almost 3 standard deviations above where we should be. So even if it comes down another 1,000 points from where it is, we're still up. Like we're still like we could drop a standard deviation and a half, and we're still above the pandemic lows. So I'm keeping that in mind, that this is a really good thing. And that's what I wanted to hammer home today, was that if you're getting a little upset, if you're getting frustrated with things, don't. This is where we want to be. All-time highs coming up soon. Maybe. I don't know. I think once the pressure's relieved, that yeah, we're going to see some all-time highs for sure. But when's that pressure going to relieve? That's the question. Nobody really knows. There are a bunch of people that think they know. There are a bunch of people that are saying things that their own predictions that they think are right. Who knows? I don't want to listen to anybody. I just want to, or I don't want to take anybody's word. I would rather just hear what they have to say and add it to my own opinion. That's kind of what I'm doing. And my opinion is we're just going to move around. We're just going to kind of keep doing this until we have a reason to not do it. I think once the Fed says, all right, we're good on the increases, or we're going to slow down on the increases, that's going to be enough to move the money from bonds back into stocks. Not to mention, we're going to have pressure on bonds now since the Fed is unloading them. So hopefully a lot of that money will move out of there and come back into here. And that will be that will keep it from slamming down quite as hard. It probably won't drive it up quite yet because yields have to drop a little bit. Prices have to go up on the bonds themselves. But for now, that's just kind of where we are. So we're looking at a little, some congestion up in here, and then some serious support way down here if it keeps going at that like 30, 34, 3,000 to 3,400 level. That's all extremely congested. So we're looking at those for possible bottoms. Maybe even down towards the median, but that's way too low. I don't think it's going to go that low. All right, so let's get into the news here. What do we have? Future Space G, what's up, man? I bet you're doing so well right now. You still got that short going? I mean, I'm looking at these candles right here. This whole week I was looking at this thinking like, oh, Future Space G is gonna be in the money on those puts pretty soon if he's not already. So So you got 550 Tesla incoming. Prepare the money. Hey, I've already started buying Tesla a little bit. I was buying fractional shares of both Tesla and Amazon because it's starting to get into the range that I like. I hope it goes down to 550. Let's see, your short position still open on S&P. Yeah, man. Look at this chart. I don't know if you came in when I was talking about this, but I mean this we're on the weekly right now. You've got one, two, three, four, five, six, 7 straight red candles. I mean your short is perfect. And I was telling everybody earlier, I was looking at Target. I almost bought Target puts right before that drop. I wanted to because I knew Walmart had it dropped and it was having supply chain issues. It's a way bigger company than Target. It has way more resources. So I figured Target's going to have it just as bad or worse. And I was right, but I didn't end up getting anything because I was distracted. So that was unfortunate. But yeah, this is a shorter's market. This is a bear market right now. I mean, shorting things is the way to go, as long as you can. Like if we get little pops, that's when I want to short. Like when it's down like this, I don't really want to short it there. But when we get those like 3 day or 1 week pops, those are the ones that I want to short specific companies or actually the indexes because it's a little easier to predict than the companies themselves. So yeah. That's ride that short position, man. Close it. Well, I mean, you could probably close it out pretty soon. You're gonna have some profits coming up. But it's looking really good right there. So let's see. What do we got here? Let's get into the news. So the macro news. Powell was he had an interview on Tuesday, and he said labor is going to be okay, but it's going to take a hit from what they're doing. They have to slow growth to tamp down inflation, and there's going to be some pain. So that's telling us right there that there's still a whole lot of downward pressure on the market coming from the Fed. If they think if there's quote, and that's a quote, they actually said there will be some pain, then there are going to be a lot of people that are not willing to come back into the market yet, and more people are going to pull. So I'm looking at still that gradual downtrend. This year, no growth, just short squeezes. Yeah, it's going to be a lot of short squeezes. We're waiting for those rates. Got to get to the end of the year. I think at the end of the year we could have a pump. There's only no more there's no more support. Only sellers taking a break. Well, there's some support when it gets a little lower. I was just talking about like right here at that 3,500 level, all the way down to the 3,200 level. There's some support in there because we had some volatility and some price levels. There's also a little support down here, like 3,000 from before the pandemic and everything. But this little area where this 3,900 down to about 35 or so, is not a whole lot of support right in there. So that could easily get broken. I mean, we could be down, towards these pre-pandemic areas pretty soon. 3,400, yeah, a long way to go. Probably till August, no buying. Well, yeah, I mean, I'm not buying this. I'm buying little bits of specific things. And August, see, that's what I was saying earlier. Somebody else was saying they think there might be an all-time high by August, which is possible, but not likely. But I think maybe around that time, if things are looking better, that's when the rally could start. We got to get past that June rate, and so July, August. Might start, but then September is going to be a little weird. So you gotta pick your battles. I don't know. So I'm looking more towards the end of the year to buy some other stuff, but little things, I'm just putting little amounts in here and there. It keeps going down. No biggie. This is what I want. So we're looking at those levels right now. This year is doomed. Make no hopes. Yeah, I don't know, man. It could be the whole year. My guess is that the very end of the year, if things go well, then that's where we get the start. But who knows? Maybe after September. Yeah, that would be my thing, like October. So we might. I'm guessing that we'll get a little bounce or a little volatility in like July, August, in between those two rate announcements, and then once we get into the September area, that's going to be super volatile, and that'll kind of tell us, what's going to happen after that, because by September the rates should be getting close to where they want it to be, because they want to ease the last few rate hikes in slowly. Like they want the last few ones to be quarter basis point hikes, maybe less than that. So they're kind of going quick, and then they're sort of leveling off the curve a little bit. So we'll see what happens. But yeah, and the other thing is I wouldn't put a rally past anything. I mean, there's so much upward pressure if things go well. If suddenly the Ukraine thing just stops for whatever reason, I mean, that would be huge for the market. I mean, it would take a while for the ripple effects to actually affect the businesses, but the market itself would react quickly because it's forward looking, 6 to 12 months out. So there would probably be a pop before, a retracement. But we'll see. I mean, the other thing is though, we've come down quite a bit, all red candles on the weekly for quite a while. So there probably is going to be a little squeeze bounce sometime soon fact, let me switch this to the daily real quick. Let's get a better look at that. So we're kind of looking at hopefully, I mean, because if you look at the trend right here, we have these little, this is like a week's worth of time. There's it looks like it's going up, but it only bounces off a level and keeps going. So I think we got another one of these coming in pretty soon. We saw that little drop at the end of the week. There might be some panicking at the beginning of next week, but I'm thinking we're going to have some congestion here before we go lower, if we go lower. All right, so let's get back to the news here. Um, so we talked about the Powell saying, inflation. They're going to tamp down inflation. They have to slow growth. Unfortunately, they have to hit the labor market a little bit, which is very unfortunate. But the Philadelphia uh, Fed President Harker said he's less worried about a recession now. So he thinks that we're going to be able to have quote a soft landing, which I think we will too. I mean, unless something new comes up. That's the only thing. We can't really predict if any new things are going to come out in the news. So we got to watch that. Um, so let's see. All right, I guess, some more stuff we had in the news. There was some distraction. The Biden administration was saying that corporate tax increases would bring down inflation, which probably would not do that much at all. Um, it was more just a way to, it was more a political battle than anything else. And Bezos was coming back at him saying that's misinformation. I mean, it might help a little in certain ways, but really, that's the inflation is coming from all the money and that we printed and the supply chain issue. So getting corporate tax money I mean, would be good for certain things, bad for other things, and it wouldn't really do much for inflation. So we're not looking at an easy fix, which some people think like, oh, just do this and it'll fix it. No, there's so much going into it right now. It's going to take some time. It's going to take the entire world to get this down because it's not just a U.S. problem. It's a global problem. We have slowdowns everywhere. So we got over here. All-time highs by August, SPY 360 by September. All right, let's keep that prediction in there. See, we got a bearish prediction and a bullish prediction, which I like because I like to have both. I want the bear case and the bull case all the time. There are a lot of people that just want to, they make up their mind and they only listen to that. But like, no, I want to hear everything. If I think it's going one way, I want to listen to the people that are talking about it going the other way more because I need to poke holes in my ideas if there are holes to be poked. So let's see. Well, dropping to the pandemic highs is considered recession. Well, that's the thing. A recession it technically means 2 quarters of negative GDP growth, right? So we had 1 quarter already of negative GDP growth. If this next quarter comes in negative, then that will technically be a recession. I mean, so you could have a recession in 6 months, right? 6 months of time could be a recession. There was a glitch trade on January 25th to SPY 364. What do you mean a glitch trade to SPY 364? Are you saying, let's see, it showed you where the bottom point of momentum is going? Let's see, 24th. Do I have that one? You said it was January or 25th. Let's go to the 25th right here. Yeah, I don't, on this chart, it's not showing me anything more than just a normal candle right here. It looks like actually, let's go to the SPY. You're talking about the SPY, not the SPX. That would make sense if we go here. And let me turn off these contract cycles because they're getting a little annoying. Let's do that. Okay, we'll put those back on later. All right, so 24th, 25th, it's the same thing. I'm not seeing a whole lot of that. It showed you where the bottom was on January 25th. Open, there was a lower wick on every time frame, SPY 360. It disappeared a week later. People don't realize what it means. Well, sometimes the prints aren't accurate, like right on the way. Like sometimes there are huge trades that look like they're going to move or act like they move the market, but they don't, and they correct it later. Sometimes I think those glitches are just huge moves that eventually get covered up, but I don't know if that's necessarily going to predict uh, where it goes just based on that. Because we've had so much since that day, we've had so much volatility. We had this like nice uptrend after and that's the thing. Like, what happened during these pops? That's what you got to think about. Like, people don't know what it is. I promise. Okay, well let's keep that in mind, man, because it's always good to have different predictions. And I could definitely see, since this area right here was an area of congestion, I can see this as being an area that it pops back up to. So you were saying that you think it's going to be 364 by what, August or something or September? 364. So where is 364? Right about here. Yeah, like right before the all-time highs at the end of the year, there was a lot of congestion in this spot. That's actually a good target for a bull run. I don't necessarily agree that it's going to be in the time frame that you think it is, but I don't think that it necessarily won't either. I think there is a possibility. Like I said, it all depends upon what happens. I mean, you got to look at the chart and see like what made these moves, right? Like this one right here, this big pump. This was when the Fed first started their interest rate hikes, and they didn't go above what they said. Like there are a lot of people shorting that said, all right, this is it. They're going to drop way more, so I'm going to short it. And when the Fed came out and said, no, we're not going to drop it. We're just going to do exactly what we said. The market said, all right, great, things are better than we thought. Let's rally. And the squeeze happened. So that's what this little thing was. It was a response to that. So what is making this happen? Like these big drops, a lot of these are coming on days when either the Fed is saying something bearish or there are a lot of terrible earnings. Like what happened at the end of the week was mostly Target and Walmart crashing the market because they did so poorly, and people thought if they're kind of a representation of all retail. I mean, they don't exactly encompass all retail, but they're kind of a representation of it because they're so huge. So that made people think like, oh, the consumer is having problems because Amazon had issues, so their online sales were down a bit, or no, maybe it wasn't the sales that were down, it was the profit was down, so they lost a bunch. You're thinking, all right, online slowed a little bit and in person slowed a little bit. Also, let's take a look at this volume here. So we're on the daily. The volume is relatively average. It's a bit elevated from normal. If you look at the one we had on Friday, there was a good amount of volume, but we're not at like crazy levels yet. So I want to see uh, when there's a huge drop. I want to see some volume come in to protect it. But like I said, there's not a whole lot of resistance in this area, so we still could be dropping a little bit. However, we could get the farther we drop, the harder the bounce is going to be. So my guess would be if it does bounce, it'll be later in the year, and we're looking at probably somewhere between this 420 level and the 460 level that you were talking about. I mean, that's a good target by the end of the year, maybe a little bit before that, if it comes back. Otherwise, I think the rally could start the beginning of next year. So we're going to keep an eye on that. But definitely a lot going on. Okay, so let's go down the news a little bit more. So looks like Russia was responding to Finland, and they cut off their gas starting on Saturday for joining NATO. So that's going to in fact, let's pull up oil real quick and see what that did, because I actually didn't even watch oil this week. And look at that, it's still doing exactly what I thought, man. I mean, we were talking about this last week when it was down here, and we were saying, okay, this is probably going to bounce back up to this 82-ish level again. And look at that, it's right under there. It's 80 or 81.65. So we're getting close on that. And cutting off Finland's gas means that they're going to have to pay more to get gas from other areas, which is bullish for oil. Um, so we're looking at that. Okay, and then in other parts of the news, so like oil, that's all we're gonna say about oil right now because we know everything's good with oil. If you have oil, you're happy at the moment. Um, so let's take a look at what else was going. So the big story of the week still is Twitter, right? We've got a whole lot of stuff happening in the social media space itself. Um, so it looks like, before I get into Twitter, social media lobbyists are suing this Texas law forcing social media companies to not ban users based on political affiliation and to disclose how they moderate content. See, that to me is very important. Like, there's the banning thing, yes, but disclosing how they moderate content is extremely important. Because if you watch any social media platform, they all say the same thing. They say, all right, I had a video get taken down. I don't know why. I asked the company what's going on, and they didn't give me a good answer. And that's across the board. You're getting that on YouTube, Facebook, Instagram, Snapchat, TikTok, whatever. You pick your thing. It's the same way. So this law, and this is only a Texas law. It's not a federal law, but it would say they have to disclose why they're banning things. So if you ask them, hey, why did you ban or take my video down? They have to say, oh, it was because at mark 1 minute and 35 you did this or something, which would be nice because then people could learn from their mistakes and adjust their content accordingly. It's really hard to just guess, so I understand why they're doing that. But lobbyists are trying to fight to get them not to do that, or to not let this law go through, because they want to keep doing what they're doing. If they have to be more transparent, not only does that mean they have to disclose what they're actually doing, but it also means that they have to add people, they have to pay more to update how the public on how they're doing it. Somebody has to be there to actually tell them. So it's going to cost them money to do that. It's not just a whole thing about ideology and whatever. It's also about money. So if that thing goes through, then these companies will have to say what they're actually doing, at least there. I don't know how that's going to affect all the other states and all the other parts of the world, but that's definitely something to keep an eye on because that's going to be big for social media companies. That's going to their stock will probably drop a little bit because they're going to have to spend more money to do that. But at the same time, I think it'll be great for content creators. So we'll see what happens there. Um, so the Twitter battle is still going on. Oh man, this has been an interesting week. I feel like the Michael Jackson popcorn meme. Like like I'm sitting here just watching this battle go on. I can't even believe some of the stuff that's actually coming out of this. It's been really interesting. All right, what do we got there? Chris Hedges' League Camp had all their videos shadow banned on YouTube after RT was dropped by DirecTV. Twitter drama, soap opera. Yeah, no, there's been all kinds of stuff going on since this started. I'm looking for a weekly gap to get filled on Tuesday, Wednesday with the FOMC, and then uptrend start. Yeah, we'll see what happens. The gap in. Are you talking about the SPX for the gap there? Let's see. Actually, let me go back to. Let's go back to the SPY real quick. Let's see. Yeah, SPY weekly. Yeah, okay. And what gap? Let's go to the week. Let's go to the big chart and go to the weekly so I can find this gap here. These gap fills are big. As much as I rag on technical analysis, I think gap fills are extremely. Like here's one right here. Is that the one you're talking about? The one from April of last year, or are we talking about gaps like this gap right here around the 410? Currently fat gap from the futures. No, this you're talking about this week. Uh, I'm not. Oh, well, if I go over to the gap that it gapped up like what $20 or something today, but I'm not seeing like a gap. I'm only seeing small. Like a real gap would be like this over here in the pandemic drop. See that's what I'm talking about with the gap fill uh, on the ES. Oh, okay. I thought you said SPY. Let's go on the ES here. Yeah, this chart's not showing it to me. I'd have to see what you're talking about, but we got a little green right now. That's interesting. All right, so where were we? Let's go back to Twitter here. S&P already growing pre-market. Want to take a break at 3950 means they want to take a 4100. Good spot to short, small amount. Yeah, that's what I'm thinking. If we get that little bounce, then I'm looking at shorting it again because that's the environment we're in up until we get past these. Like I said, all these rate a million. I know I've said it a million times, but yeah, the rate announcements. That's what we're waiting for, man. We got one more month until an important one, or actually probably about what 3 weeks or so. So there's going to be some nervousness up until then. And usually what'll happen, since those are on Wednesdays, they'll be like the week before there'll be a nice drop, and then Monday and Tuesday sometimes there'll be a little bit of a bounce, or what it used to be that Monday and Tuesday would just be the biggest drop of all. But lately it's been the week before that's the biggest drop, and then Monday, Tuesday are kind of rebounds until Powell starts talking, and then of course it starts dropping a little bit. You ever look at the VIX open interest? The 250K calls at the 75 October expiration. Yeah, I'm usually do if I trade the VIX, I'm usually trading UVXY so I can get the leverage. I don't usually do futures. I usually don't do the VIX itself. But yeah, see the VIX. What I like about the VIX right now is it's right in this 20 level. This is key because a lot of times it either bounces off this level or it gets rejected pretty hard. UVXY is UVXY moves more than UVIX moves more than UVXY now. It's higher what is it? Like cuz UVXY is 1.5. I don't do let's see UVIX. Let's look at UVIX. Oh, this is new. What is this? 2x. That's why cuz UVXY is 1.5. This is 2x. So yeah, that would make sense. But look at how new this is. I mean, this is only a few weeks old. I don't want to trade this. I wouldn't touch it. That's my I like something that's nice and destroyed like UVXY, super split, because it's so predictable and it's good for shorts on pops. Dang it. And this chart slows my computer down. I'm trying to get this to zoom in a little bit, but it's loading so slow. Yeah, so because look at this. See, this is what I like about UVXY. I mean, when we get these pops like this, they're so great to short. The only problem is the premium's not that great because if you're doing a spread like I am, then you're getting the contracts are so close together in price that you're not going to get a whole lot of premium. So it's actually really difficult for me to short a lot of this stuff, which is why I like to go with the indexes more, because people that are shorting UVXY and VIX, like they know what they're doing way more than I do, you know. Let's see, yeah, came out last month. Yeah, I don't trust anything that's that new. It's definitely something to keep an eye on. In fact, I'm gonna put that in my list right now because I don't think I have that one in there. So oops, that's not what I wanted to do. I'm looking for all. I want to go to the bottom and add UVIX. UVIX. Okay, keep an eye on that. But yeah, that's definitely something to look for volatility. I mean, volatility is it's up, and it's probably going to go up a little bit more as we get closer to that rate announcement. I don't trust this BRB. Let me add it. Yeah, no, exactly. I want to watch it. That's what I'm saying. Like, I need to watch it for a while before I trust it. And the fact that it's new is why I want to stay away from it for a minute. But it's always good to learn some new stuff. It's always nice. Okay, so let's get back to Twitter here. All right, so the Twitter drama. Oh man, I've been waiting to talk about this all week. This is so funny. So I don't know how much you guys saw of the Twitter drama, but their big problem right now, I wrote in the first thing, bots and debt, right? So they have a problem with bots. They're saying that bots make up less than 5% of their total user base. However, independent researchers have said that it could be anywhere between 9 and 20%. And I think there was another estimate at like almost 25%. Elon Musk responded to that, said if 25% of the users are bots, then he's buying it for 25% cheaper. So he's trying to get a better price on this, which, if you're a smart business person, you should. But we need to know how many bots are in there, because that affects the amount of money he can make. I mean, because it's all about advertising, right? There's a subscription service, and then there's their advertising, and the subscription service only makes up like 10% of their revenue. So most of it is the ad money. And if you have 25% fewer users, that ad money isn't going to go as far. So he wants to know exactly how much of these are bots. And here's the other part of that. If 20, let's just, we don't have to go with the highest estimate. Let's say like 15%. All right, we'll go in between everybody. So let's say like 15% of them are bots. That means that they were lying on their SEC filings about their user numbers, because usually what moves the stock of social media stock would be two things, right? Guidance, which is what moves everything. Always got to pay attention to the guidance, but that's kind of a given. And users, right? How many users do they have? How many active users do they have? And how fast are they growing? So it's in their interest to add users, and if they're doing it with bots, then they were able to report to the shareholders, hey, look at how much we grew. And the shareholders bought based on that. So they spent a whole bunch of money thinking, oh, this is going so well. The advertisers are gonna spend more money, so we're gonna put more money into the stock. Um, Sorry about that. My kid's going crazy in the background right now. Um, so we really don't know how many of those users are bots. And when they come out and say it, if they have been lying about that, then they could be in trouble with the SEC. So that's the other thing. Like if you put this whole Musk thing on the side, then there could be some serious trouble for them if they do that. All hate circle. Musk is good. Everybody and there's that divide, man. Some people really don't like Elon Musk. Some people really do like him. But right now I'm just sitting here eating popcorn, watching this drama unfold because I'm loving this. All right, so here's the funny part, right? So the bots, that's one thing. Well, actually, before the funny part, they're also bleeding talent. They're losing a lot of people. People are quitting because this is a crazy time. They don't know if they're going to have a job. Some people ideologically don't want to be a part of this. Other people do, etc. So they've got a bot problem. They're bleeding talent. They have a lot of debt. See, that's the other thing too. If Elon Musk buys this company for the price that he said, there's going to be a whole lot of debt in there. They're going to have to make a bunch of money to pay that loan back because he's putting up like half his money, half money from an investment bank. And I mean, that's like $20 billion or something. So there's going to be they're going to need to make more money than they make now in order to pay that back. So that's another problem. But here's the hilarious thing. There were two stings this week against Twitter employees, and I don't know if the second one was even real. It was so ridiculous. I couldn't tell if it was real or not. So they were talking about, the first one, they got an engineer on Tinder to go on a date with some reporter, and the reporter got him to talk, and he basically admitted that they were banning one ideology more so than the other, and that got that on tape. Elon Musk asked him if that was real, and the company said yes, it is. So I mean, we'll see if that if it's verified later on, but it looked pretty real. And then the second one, there was another sting later in the week, and this one was hilarious because it was a guy that I don't remember what his position was. He wasn't an engineer, but he was another higher up at Twitter. He met someone else from the same media organization. And went on a date with him and was basically saying, like, look at this email. They told us not to be telling anybody about the stuff you and I are talking about right now. He was talking about everything. It even mentioned the name of the company that the reporter was a part of, and he was reading it to it. He's telling him, look at this email. It says we're not supposed to do any of this stuff that we're talking about right now. But I met you organically, so I'm just going to tell you everything. And it was so ridiculous. I couldn't tell if it was real or not. So I mean, this whole Twitter thing is going insane. I don't know what's going to go on. I really seriously doubt that they're going to get that 54.20 price. I think the price is going to come down unless they can prove that less than 5% of the users are bots. This is not looking good for calls right now. This is still definitely a short until things have been proven. Actually, I'm not touching anything. I've got some like dead in the water calls that I'm just sitting on in case it comes back. But I sold my puts way too early. Unfortunately, I didn't get to take advantage of this nice drop right here. I put my puts on before all this happened. They went into the grave, and I saw a little bit of an opportunity to take them back, and I took it. But of course, I took it too early. So, that's been the theme. I was doing so well when I was first like 2 or 3 months that I was doing this stream. Every week I was coming in with like, oh yeah, I traded this, I got that, I got this win. I made some money here. That's past couple of weeks. It's been nothing. It's just been absolute crap. So I'm in a mini slump, which is okay because it happens. And when you do well for a while, there's always that little time that you don't. And one thing I realize is when you start going into those slumps, it's better to just not do anything. Instead of trying to force the trade and make the money, just stay back and wait for the opportunities that you know are good. So that's what I'm doing right now. I cut my positions that I wasn't that confident in so that I could have a little bit more cash. And I'm just sitting until there's a reason for me to get into something. And right now, there isn't. I could have gotten into Target. That was the thing I really wanted to get into. I'm still pissed about that. That would have been a great win, but I didn't do that. So whatever. It's time to just sit on the side until I figure out something to do. All right. So Twitter, yeah, that was really interesting. We talked. Let's see. Talked about Walmart a little bit. Their sales went. So let me go up to Walmart. Let's just cover it a little more because I actually didn't check my notes. So I've been waiting for this one. This was way too high. I knew up here it was too high. I was actually looking at shorting it a bit, but I just didn't want to. I didn't want to do it before earnings, which would have been great if I had. So let's see, their sales came in higher than expected, but the input cost was so much that they made less profit. They guided down from an EPS mid single digits to flat. That's what it was. So they were saying mid single digits, so somewhere about like $5 EPS would have been their future guidance, but they brought that down to zero, maybe just a little bit above zero, which is why the thing dropped so much. So the supply chain issue affected it a little bit, but it was guidance. That's the thing that really moves the stock. You got to wait. When you see the numbers, you got to wait until the conference call is finished, or at least enough of the conference call to give you an idea of what's going on because that is the thing that will move. So Walmart dropped on that, and then of course Target, we talked about that. That dropped afterwards. So retail is absolute garbage right now. But let's see some positive news. AMD, which is a stock I really like. I wish I still had it. I bought it in like the teens and 20s and ended up selling it in the like high 30s, low 40s or something. So unfortunately, we went way up, but it's come down, and I would like to get in on that. But let's see, what do we have? So they're moving into the business PC market, which they haven't been into for a while, and they got some analyst upgrades, which actually, I don't know if we're going to see them on the news here, but analyst upgrades are some of the best things you can get. So when you're looking at what moves a stock, if you were to ask me what are the main things that move a stock, one, the actual fundamentals. I mean, if they get a loan, if they have to pay a loan back, if if they make a bunch of money or they lose a bunch of money, then that will move the stock. Guidance, that is one of the biggest ones that'll move the stock afterwards. So no, fundamentals, guidance, and analyst upgrades and downgrades. The analyst upgrades are some of the best things you can get. If you have good guidance and the next day a good analyst upgrade, the stock can soar. So AMD, they got a couple of upgrades for the fact that they're going to be moving into this market and they're doing so well right now, even though their stock got crushed. See, that's what's so funny. They didn't have a terrible quarter. they did okay, and they have been for a while, but the market and the chip shortage have been weighing on this. So AMD, if AMD drops a little more, I'm really liking getting in. In fact, I like it at these levels right here because I mean look at the support, right? End of 2020, beginning of 2021, there's this huge row of candles that just kind of sit at this like 86 to 92 area. And it's been, I mean, look at how it's like it fits so perfectly with the standard deviations too. It was bouncing off this 3 standard deviation mark for quite a while. That's actually what this trend is. It's a bounce off. And look, it went down to the 2 standard deviation, bounced off of that, had a little congestion when the moving averages were crossing, because there's a lot of traders that look at like the 20 and the 50 uh, cross, whatever, the golden cross or something like that, which I don't know if maybe that's a different one, but so traders are liking it when the short-term average starts to come up over the long-term average, which in that case was right because it had this nice uptrend. But now we're getting back down here, and I'm liking that for the future. They already reported, so we got the big stuff out of the way. There's going to be manufacturing opening up for chips in the United States more as time goes on. So AMD is definitely one on drops I'm looking into. Okay, what else we got here? So McDonald's and Wendy's, interesting. They're going to be getting sued because their burgers are not as big in person as they are in the advertisements. So claims the lawsuit, at least. I don't really know if that's actually the case. They're saying the lawsuit was saying that in the commercials they're purposefully undercooking the burgers so the meat will look bigger, and which I'm sure they do. Not to mention they also stick it off one side of the bun and they have it like the other side with basically nothing on it and it's all squinched down, but the side with the beef sticking out is all, there's a bunch of lettuce and tomato, so it makes it look like there's more than there is. And that's kind of what they're saying. They're like, all right, your beef is not what it is in the stores, and it's not what it is in the advertisement. So we're suing. And I think Burger King, which is Restaurant Brands (QSR), they already got sued um, earlier this year for the exact same thing. So I'm sure everybody's doing it. I mean, they have to. They're looking. Sorry, you said something over here. AMD definitely buy at 80. Yeah, I like AMD in the 80s. I mean, if it goes even lower, great. But yeah, 80 would be a great. I mean, that's about half of what it was before it bounced up. So yeah, where are we here? Restaurant Brands. Yeah, they got sued at the beginning of the year. It's probably what this little downturn was right here, somewhere in this area. Uh, but McDonald's, let's go to MCD. McDonald's, which actually McDonald's is more of a real estate company than a restaurant. Like you think of McDonald's, you think of their fast food, but they actually own the lots that they sit in, and they rent properties to other businesses, and they rent the properties to the franchises themselves too. So they're collecting money from the revenue of the sales of food. They're collecting rent, and I think they're collecting they're doing other stuff too that I'm blanking on right now. But McDonald's is actually, if you want a really good long-term solid company with exposure to real estate and other things, McDonald's is great for that. I've actually wanted to get in for a long time, but it doesn't really drop enough for me to get in there. Plus, it's expensive, and I've already got these other stocks, so I wouldn't be buying a whole lot of it. But one day, like if it's kind of a fantasy thing, if I had a whole bunch of money, I would own some McDonald's stock for sure because I mean, they're so much more than just a burger joint, and they're coming back down to this little area right here. Like if they get to the 220 area, I mean that's a good place to look in. But let's check out Wendy's. All right, so Wendy's is an interesting stock because if you look at what they've done for the past 3-4 years, it's been flat. Like if you bought in 2019 or so, you're paying around $20 a share. Now you're down because it's at 16, but it just didn't do anything. It stayed in this like 20 to 24 range for 3 or 4 straight years. So the fact that it's coming down right now and it's actually below the median of the standard deviation channel, I like this as a bounce in the future. So I'm looking at. In fact, let's take a look at the option chain on this thing. If I go to January of next year, yeah, calls are not expensive. Like it's gone up to 24 before. Like look at that, $30 for the 24 call for January. In fact, let me go to 2024. What's that one looking like? That's great, man. You go to, yeah, $100 for the 2022, 60, $70 for the 25. Like I don't think it would go much over that. If it ever does go over 25, like shoots up real quick, then I would sell right away. Yeah, Wendy's will go a lot higher. Yeah, it's got so much room at this point. Let's go back over to charts. It's probably not gonna it's gonna hit this level again and hang out here for quite a while because this is a huge congestion level. I mean, the volume. Let's see. Let's zoom in a little bit. volume's pretty high. 15 million shares traded on Friday, and 27, 28 on Thursday when they reported. Yeah, see that brought them down a little bit. So I'm looking at Wendy's as far as a bounce. Like if I can get up to those low 20s, like if it can get to like 22, 23, I mean even 20, like that's really my goal. Is like I think it could definitely get back to 20, and it has a good chance of hitting this thing. But like 24 seems to be the top. Like once it hits that or goes a little bit above it, it's done. It comes back down quick. So I like this as far as a bounce. And look at that. You know why? Like I didn't even notice this. It's hard to see, but the standard deviation channel goes right there. It once it goes above one standard deviation above the mean, it just comes right back down. In fact, let me do this over the daily and see what that looks like. Same way with the daily. Let's switch it to the quarterly. Yeah, look at that. It's riding that standard deviation line. Like you can see, it's piercing through it. Yes, you can kind of see that, but that's where it wants to hang out. Like it bounced off the median. It's a little bit below the median right now, but it wants to go back up to this like 23, 24 level at some point. So that's what I'm watching hard right now because it's cheap. See, this is what I like about Wendy's. It's so, all right, it's so cheap, and it's how many shares does it have? It's not a huge company, or it's not a huge float. 200 million. It's not small, but is I mean, if you look at these other ones, like look at Alibaba is 2.5 billion, right? Ford is 4 billion, so it's really not that huge of a float. You should sell the volume by the price level indicator. You should set the volume by the price level indicator. So I usually have a volume average going on there, but I don't have that set up right now. I was actually just trying to clean my charts up a little bit. Um, let's see. In fact, let me pull the volume up a little bit so you can see it better. Yeah, there's been quite a bit of volume over the past few years compared to what it used to be. When was that? Oh nine. Oh, that was the financial crisis. So it's been coming down since then. Yeah, that's really interesting. Actually, the volume's been dropping consistently. I think the reason it has is because it hasn't been going up over that 25 or that 24 mark. I mean, it gets up there and then it hangs out and drops. So anybody that's expecting growth, I mean, you buy a bunch of shares at 21, and 3 years later it's at 22. That's not really what you want. So I think people are getting out of that and going into other things just because that it's not performing the way they would like. But as far as a trade for a bounce, oh, I love this one, man. This is so wonderful. I've been waiting like 2 years for this to happen because every time it gets down to 19, I usually buy calls on it or I buy some shares and then I sell it when it's up. So it's been such a reliable bounce that now that it's down here, I really like it for a bounce later. See, by the price level, not time. Oh, okay. So you're talking about like sideways volume or what's that? Volume profile or something like that. Um, yeah, that one is actually really nice because then you could tell the volume per price level, which is good, and I should be putting that on there actually, but I don't. In fact, let me see. Maybe I can do that real quick. Let's see, volume. What was it? Unbalanced volume, negative volume, volume average. I am blanking on volume profile. That's what I'm looking for. Pro. There it is, volume profile. Let's add that. Apply. Oh, geez. I'm gonna have to move that over a little bit. That's a little extreme. I don't know how to move that over, but that's okay. Oops. Let's take a look at that right there. In fact, let me go from quarter to weekly. There we go. That's a little better. Okay, so yeah, there we go. Yeah, see, this is what I like too. That was a good suggestion. Put it on the volume profile because what I'm seeing right now is this big candle right here was very, very low volume. This is super low resistance. I mean, like you're seeing the shares kind of traded in this area right here, this 17, like let's say between 18 and 1650 was where a lot of this went. So if it gets over that, it could shoot right up here. I mean, and look at that, 20, right? Which makes sense because this thing has been bouncing between 20 and 24 for years now. So once it broke that support, it panicked. And I love this for a bounce right here. I love that, man. Low volume, huge move. Perfect. That's perfect. Because okay, so you know what? Last week we were talking about volume and price movements. I thought of an analogy for why volume moves more with fewer people. So think about like let's say a football field, right? Soccer field, actual football, whatever you want to call it. Um, if you have one person on one side and one person on the other, and they're playing together. If one of those, if the person with the ball gets past the defender, they're wide open to run to the goal, right? But let's say you have 30 people on each team, right? It's going to be really hard to break through 30 people to get to the goal. So it's kind of the same thing with volume. If you only have a few people trading, if that person really wants to get in or out, they'll be willing to either take a lower price or pay a higher price just to get in, and there's no one else to balance the market out. Like normally, if you have a bunch of people selling, then if somebody doesn't want to sell shares at a certain amount, there might be 30 other people that do. But when those people aren't there, you could move right past that. So that's why after hours is kind of dangerous sometimes, because you could see people that really want to get in or out. They could tank a stock. You could think it's going, everything's going wrong or everything's going right, and then once the actual market opens the next day, everything drops or corrects back to the price because all the players came back to the field. So that's what I like about this little section right here with the volume profile. There are very few players on the field between 18 and 20. So that's a nice little. I mean, I could set my goal to 20. I think it'll go above that, but 20 would be an actual good place to get out. I mean, that's kind of the bottom support level right there. So what do we got? Good to spot where people good to spot where people are, where it's hard to break. Yeah, exactly. I mean, the more this volume profile is great for that because the higher you get into this, the more or the slower it's going to go. I mean, you're going from the open field to the packed field right here, and down here we're starting to get a little bit of congestion because if you go back to what is that 2019 or is that 2018? Oh, that's 20. Yeah, you go back to 2019. I mean, the entire year was basically between here and here. No, that's before 2019, isn't it? Yeah, it says 2019. Okay, whatever. I could have sworn in 2019. No, this is 2019. So this is 2018. All right. Yeah, in 2018, this is where the volume was for most of the year. So that's why this volume profile started picking up because all the people that picked up shares in 2018 that have been up this entire time are finally considering selling. And that's the important thing. Like these people right here kind of made up the bulk of this. Everybody else pumped it and they stayed in. I mean, you got to kind of count out the pandemic drop because that was a fluke. But I mean, look at what happened right after the drop. It came right back to its 22 level. I mean, and that's where it's been sitting because there were new opportunists coming in during this little drop too. So I mean, you're looking at some serious resistance when you get up into like 21, 22. But yeah, this is a great move. So thank you for the suggestion, Future Space G. I appreciate that. I use the volume profile sometimes, but I totally forget about it. But it's so nice to be able to see. Like people that do Bitcoin videos have it on all the time, and I always see it and go, oh man, I need to put that on my chart because it's so helpful. Could you go to the S&P with this indicator? Want to see where the people are there? Yeah, let's go check out the S&P. SPX. Oh, it's not even going to show it on that one. All right, how about the SPY? There we go, the SPY. Ha! Well, that's interesting. Makes sense though. I mean, that was probably what the Great Financial Crisis right in here. I'm assuming. Let's back that up a little bit. Yep. Okay. So this huge volume spike is from this financial crisis. So we're kind of going to ignore that. And it was pretty heavy right in here, right before the 2016 election, actually. Now, in there, because there's some other stuff that spooked the markets. There were a few dips right here where you had some opportunities. Like a top is barely any. Well, yeah, exactly. See, that's the thing. When you see huge moves like that, it's usually because there aren't as many people. Like down moves will bring in way more volume than up moves. I mean, up moves can be caused by just somebody with a lot of money, one institution or a couple institutions moving things. Whereas when there's a huge panic and every last person is in there selling, then you get support. So we have kind of developed a little bit of a support level or a resistance level, I guess, right here at that 439 level, which makes sense because if you look at that, that's kind of where we were bouncing around in last year before this last pump, and this is where it's been when it bounces, it kind of comes up to there. So this makes sense that this is a high price level, but look at this, where we are right now, extremely thin. So we're going to see some movements. Ah, there's a gap. Okay, was this the gap you were talking about earlier, Grim Barbs? Right here? Okay, because this is a nice little gap to fill. I having it on this is actually I can actually see it. So there we go. I was having trouble finding it earlier, but let's see what do you got here. Oh my God, top support has barely in support. 442 last bounce. Let's see, 442 last bounce. Well, this is the weekly. The last bounce looked like it was going up to 460. We've been down ever since. Nah, just the daily gap on the. Oh, you're talking about the 5-minute chart. That's why I didn't see it. Okay, I was looking at the longer time frames. All right, so yeah, a gap on a 5-minute chart. That's more in the day trading area, which is not my cup of tea. Let's see. No, just the daily chart, 5 minute for this week's movement. Still a weekly gap at early Jan, weekly basically. Uh, yeah, there's some gaps. Let's see. Yeah, this is actually one. This is the one I'm looking at though, right here. Look at that, because see the volume profile. There's barely anything in here, and that's why there's that gap. Because when it gapped up, there were a bunch of people that just put in market orders before the trading day opened, and it pushed everything up. So right now we got a little bit of volume right here, but we're definitely in a, like, if we fall, there's not a whole lot of support here, and if we go up, there's not a whole lot of support here. So there's going to be movement one direction or another. We're kind of floating in purgatory right now, which is really interesting. Um, let's see, the 442 was broken and that was sold already. Where are we? 442. Yeah, 442. Yeah, that's why. I mean, everything kind of hit that little spot and went right through it. So we're definitely, like, this is great for a move. Which way it's going to go, I'm not sure. Like, I think in the long term, well, mid-term, it's going to probably trend down a little bit until the Fed, but we could have a nice bounce up to this 413, let's call it 420 level. That kind of looks like where support starts to come back in. And if we end up falling, we're looking at like this 344 level right here. Maybe, yeah, which actually would make sense. This is about where the 200-week moving average is. So that, once you hit that, we start getting support again. And there's not a lot of support until you get down here to the median, which, I don't know if we're going to hit that or not, but if we do, that would be wonderful. That would be a gift if we can get down that far, even though it'll hurt going that far down. So yeah, very nice opening the volume profile. That was a good suggestion. I always forget about that. I'm going to leave that up for the next broadcast. Okay, so what are we looking at? We got a couple more stocks here. Netflix. So Netflix is kind of trying to make some adjustments. I mean, they had that nice big drop. NFLX. Let's look at that. Oh, look at that. See, that would make sense with this volume profile right here. It's there's very low volume that got it up to where it was. I mean, this is that 2020 and 2021 hype, right? So 2022 here, 21, 2020. Yeah, so 2020 was a big hype for it. Everybody was staying at home and they thought everyone's buying Netflix, which they were. All the streaming companies benefited from that, but they grew slower than they have in, like, I don't know, years. Their content isn't doing that well right now. I mean, there's so many reasons why they dropped, but there's very thin volume, and that's the problem with a stock like this. When you see a stock that moves up that quickly, a lot of times there isn't going to be a lot of volume to support if there is a drop. So if you're at high highs and everything's super thin, it's probably a good idea to take some gains here and there, because if things drop, it can get out of hand fast. Like, you think about the SPY, that's a huge product. I mean, there are so many different people that buy the SPY, so many different organizations, but Netflix itself is not as old as the SPY. It's in a space that's been beat up this quarter. I don't think it's going to stay down. Like, I think it's going to have a bounce at some point, which is why I keep watching it. And they're also making changes. They're firing some employees to save money, and they're probably going to try to update their content a little bit. Let's see what we got over here. The most bullish move with the VIX under 25 in history coming. We have room for more. Um, yeah, the VIX getting up there. Like, I see, that's the thing. If we get some crazy volatility coming up, that VIX is going to shoot up. But the VIX is, that's what I was trying to say earlier. It's kind of in that spot where it can move. Oh, too bad there's no volume profile on that, but it's not going to show you the volume of the options. Um, but it's in that spot where it's like right in the middle of that trend where it, just like the SPY, it could move up or down really easily because there's not a whole lot of resistance. And if you think, see, the VIX, you can't really apply the same kind of technical analysis to the VIX that you apply to other things, because the VIX doesn't work the same way. And there are people that trade options on the VIX, yes, but it's more responding to how the options of the S&P are trading. So it's kind of beholden to that other stock. And it's not easy to be like, oh, it's at this level, it's going to go to that level. Not really. Sometimes the VIX doesn't move the way you think it does, even when a sell-off or a pump happens. So when it's at this in-between level, these like high 20s, mid 20s, that's usually a sign that it's going to move greatly. Like the mean is down, yeah, a little bit under 20. That's where things start calming down once it gets below 20 historically. But once it's like, if it gets to 30, and a lot of times like that's where it'll turn around, like in the 30s, mid 30s. So that's why, another reason why I think there might be a little more selling, because we could clear up to this 35 level before the selling kind of runs out. I mean, that would, and like, how long does that usually take? It's like 2 or 3 weeks to move a standard deviation or two. So I think by the time the Fed meeting happens, that we will probably be a little higher on the VIX. Let's see. I don't believe VIX can make a bullish move until everybody massively sells. Yeah, or everybody massive sells. Well, yeah. I'm a VIX expert, honestly. VIX wouldn't break 35 briefly here. That's what I'm saying. Like, if it hits up in the mid 30s, that's kind of where it bounces a lot of the time. I mean, unless you get the pandemic kind of a thing, I mean, where it went up to 80 or 90 or whatever. But yeah, this 35 is usually about the top. So if we get some upward moves, I think after the Fed meeting, we'll probably have a bit of a run. If VIX broke out from here, we would have a 20% move down in the SPY. Yeah, I mean, that's what I'm thinking. The SPY still has a little room to go, and our meeting is 3 weeks away. So, and like I said, there's very thin volume above and below where we are right now. So this thing is going to move, man. The VIX and this are going to move. If you're trading either of those products, it's not a bad time to do that. So let's see. All right, what else we got here? Only a couple more things. Oh, that was the other thing with oil. I completely forgot about that. Chevron is extending their Venezuela limited license. They're not allowed to drill more rigs, but because they can continue working there, that's bullish for the stock. So let's see, what did CVX do? Yeah, CVX had a bit of a pump. They've been looking good lately just because of the oil thing, but now that they're also renewing the Venezuela license, that's kind of bullish. But look at this, they're kind of doing the same thing. They have thin volume below where they are. See, that's what's interesting about stocks right now. A lot of these stocks are following that same curve. We had such a big pump in some of these things that there just isn't support to hold it. So once oil crashes, this thing's coming down. Like oil stocks are so in debt, they're so highly indebted that anytime the oil prices drop, they go way down because they have to carry that. Chevron is kind of an exception. They're a much better company than a lot of these ones, but any of the small oil companies they're kind of screwed when prices go back down. So they want them to stay up here. Let's see. VIX tracks panic in a short amount of time. As times dilutes, it is to no use. Yeah, I mean, let's see. I gotta kind of figure out what that means there. Tracks panic in a short amount of time. Yeah, it's very short term. As time, let's see, as time dilutes, it is to no use. Not sure what you mean by that last one right there, future space G. But if I'm going to guess, I'm going to say it's as time goes on, it's gonna trickle down, which it does, because like that's what I like about the VIX. Once you have those nice pops, like if you're lucky enough to get a pop over the mid 30s in the VIX, like let's say it goes up to 45, that is a beautiful place to short, because even if it goes a little higher, you'll be able to average up a little bit and ride that down once things calm down. You don't trust the VIX? Yeah, well, I mean, the VIX is only a response to S&P options. Like that's what they're doing. Whatever the S&P options do, that's basically what the VIX ends up doing. So it's really not as broad of a market thing as people want to think. So it's not the best as far as everything goes, but it's a good indication of a general trend. VIX actually predicts tops and bottoms really well. It does. If you get big moves, like here, this is historically, like every time, look at this, every time it's gone above 35, we've had these big, huge drops, right? And usually it's a quick pump up above that. But a lot of times when you're stuck in this mess right here, it's harder to predict. Let's see, PCC ratios change so much so often. Yeah, let's see. So yeah, the VIX is definitely looking interesting right now. Let's see, it's called a VIX swell when the market moves up and VIX moves up at the same time. That happens sometimes. When that happens, I mean that's a huge sign of uncertainty, though. Like that's one thing I actually really like when that happens, because that tells me that pretty soon we're gonna have a nice move coming. So okay, all right. Let's see what else we got here. Last piece of news. Oh, Tesla. That was the last stock I wanted to talk about. Tesla. See, they were removed from the S&P 500 ESG list the other day, and from what I can tell, it was because Elon Musk made some comments. And it's not that big of a deal that they're removed from that, but it is an ESG stock. It's like one of the top ESG stocks, so that's kind of weird that they took them off. I need to look a little bit more into that, but definitely didn't look good for the shareholders because some of them dumped. Let's see. Oh, you guys still talking about the VIX over here? It happened in May 2021 last time. VIX has many components it tracks. I like to track them separately, but never mind. Yeah, that's what I say. The VIX is something to look at, but it's not something that I go too deep into because of the fact that it does have its limitations. Although what I do like is like big moves on the VIX very much do predict most of the time what's going to happen next. It's hard to see because every time it feels like it's different, but you can definitely see that. Sorry for your tardiness. I've been playing elsewhere. Hey, no worries, man. Come on in when you can. Always appreciate it. We were talking about volatility in the markets right now. Let's see what we got. There we go. 697 on Tesla is a very important level. When institutions join, it has the magnetic pull to it. So let's see. Let's take a look at that. Yeah, that was a big level because before the split, this was when all this high volatility was going on, and it was kind of bouncing around in these levels. At its, I mean, the vol. If you look at the volume I mean, I hate the bottom part of the volume profile. It's difficult to see the charts accurately. But yeah, there's a little bit of a swell right here around this. So what did you say, 697? Yeah, around that 697 level, that's kind of where we have a good amount of volume. So good institutional ownership. That's a good catch there because that's important. You want to see if it's just like retail traders or if it's institutional. In this case, because Tesla is highly institutional, actually. In fact, let me pull up the thing. Let's see what the percentage of institutional ownership is on Tesla, because that could give us some ideas here. Ah, so let's go to Tesla. Let's go to statistics. Let's see, a short interest. April 29 still hasn't been updated yet, but yeah, institutions. So 43% held by institution. I honestly thought that was going to be a little bit higher. Um, 17% by insiders. That's about what I expected. So it does have a decent amount of institutional ownership, but there's still, what, a third of the float that's hanging out, maybe a little more than that for everybody else. And people aren't selling Tesla. If something really bad happens to Tesla, like people are not going to sell it. It's a hold stock right now until there's a reason to. It's just going to sit there. I mean, the lower it goes, the better it gets. I've actually started buying fractional shares of it because now it's back into this level where there's a lot of congestion. I mean, we had this nice big pump, and there's thin volume within that pump, but we're still, in this zone right here where there is a little bit more volume. So I'm comfortable. And if it drops lower, I'm happy, man. Like I would love to see it break this little thin volume area right here and come back down to the 400s, but I don't necessarily know if we're going to get that chance. Let's see. Well, from 1200 to 663, it's big, and we know it drops lower. Yeah, that is a huge drop. I mean, what was the high? 1243. I mean, it's been cut in half, which is a lot of stuff has been cut. Bitcoin's been cut in half. We're going to get to crypto here in a second. The market's been cut down quite a bit. So the fact that, and here's the other thing, Tesla is actually a little bit tied into Bitcoin because they own a lot of Bitcoin. I think they own some Doge and stuff too. So cryptocurrency will also move Tesla. Imagine your Gates at short at 1100 with half a billion. I know Gates. If he shorted up here, I don't know exactly where he is, but he's in the money right now for that for sure. I mean, you're getting yeah, he probably made so much because the premiums on Tesla are insane. Like, let's look at these premiums. Like if let's say he picked up Leaps, which I would imagine, any classy gentleman would. Where's 1100? So Leaps, in the 2024, you paying like 12. So it's like they're worth like 12 grand a pop right now. Is that what that is? I think that's about 12 grand. So yeah, it's 100,000. Yeah, it's about 12 grand a pop right now. When he bought them, they were probably worth somewhere around 1,000 or two. So I mean, you think about doing that with billions of dollars or at least millions. He's up huge amount. Unless depending on where he got in. Do you know if he got in at that 1,100 level? Because they have to file, like the Bill and Melinda Gates Foundation will have to file, have SEC filings or something to see. I don't know, like personally, if you'd be able to see any of that stuff, but yeah, even if you got in the high hundreds, got in at 700, 800 or 800, 900, that's still a decent short. Those are going for, a good amount of, like, look at all these things are worth so much money. 12,000, 14,000, like, oh, those are calls. I'm sorry. We're doing puts, but he probably, I don't know, you either shorting calls or buying puts, whatever one, and probably other derivatives that aren't just regular options, I would imagine. Let's see. Well, Musk tweeted that when Tesla was at 1030, so Gates entered higher. Oh, okay. Yeah, that would make sense then. So he's up, but who knows if he's sold yet or not? If I was him, I'd probably be taking profits little by little at this point, maybe even dumping a good amount of it just in case. But I mean, there's still so much downward pressure on it that I think the Twitter thing is bleeding over into Tesla a little bit, even though it doesn't really need to. It's still part of it. So the Bitcoin is hurting it, the Twitter thing is hurting it, Elon Musk himself is hurting it. They're having some, their business is doing well, but they're beholden to the market a little bit. Their supply chain is probably going to be more difficult, especially the materials, like the cost of materials for batteries and things like that are going way, way up. So that's going to hit them. They might have guided down. I don't remember what their earnings. So what happened after earnings? Yeah, they've basically been dropping since earnings, so they may have guided down a little bit, but this is also probably just from the general market moving as well. So yeah, Tesla's looking interesting. I've been buying little bits of it. as it's been dropping. Not a whole lot, but if it does get down to that closer to that low 500 level, that's when I'm going to start going a little heavier with it, assuming there isn't news that prevents me from doing so. Because when you're buying a stock, you always want to pay attention to what's going on at the time. Like if there's some new news that could change things, if all of a sudden they're like, oh well, we can't get this certain material anymore, so now the production cost of whatever Model Y, Model 3 is going up, that's the kind of thing that will fundamentally drop the stock. So if the fundamentals still look good and the news still looks good on a drop because the entire market is moving down, then yeah, it's a beautiful buy. And I think Tesla is becoming a really nice buy as it drops more. So I'm looking into that. The other one I've been buying is Amazon. They have a split coming up. I don't know if we're going to have the same kind of movements, but after this huge drop, I mean, I had to get in here. I've been buying it. Where was I? Oh, I was buying in even lower. I was buying in like down at the bottom of this. Man, I got a good price the other day for now at least. Who knows? Probably going to keep down more, but yeah, I think I was getting in like around the 21, maybe a little under 21. Buying some there, and if it goes down, I'm gonna get some more because this split's coming up on June 6th, and that's if traders go crazy with it, then it'll be a nice buy, and I'm just going to dump it into the pop. But I actually wouldn't mind owning Amazon long term, so I might just hold on to what I have and keep buying over time. So I really haven't decided yet. It's probably going to be a nice little trade, but the other thing is it's in the middle of all this mess with the market, so it could be positive and the market could bring it down. So what I'm hoping for is the day that they have the 20-to-1 split, the market is pumping because that will get you a good exit point if it does. But if the market's not pumping, that split isn't going to matter. I mean, the reason splits matter is mostly is because of the meme stock value of it, right? Wall Street Bets is going to be all over that split, saying, "Oh, splitting tomorrow, get in on this." Uh, that's going to help pump it a little bit. The big traders, they're always like, oh, splits don't matter. It doesn't actually change the fundamental value of the stock. No, it doesn't. It's the same market cap. It's just they're just more shares now. But it allows a different user base to get in on it. People that couldn't afford to pay $3,000 a share can afford to pay like 100 and something or 200 or whatever it ends up going down to at the time of the split. So it's gonna add participants to it. Not to mention people that already have it are gonna say, oh, I don't have to spend $3,000 a share. Maybe I'll just buy a few shares here and there, and it'll incentivize people to buy chunks of shares too. So I think it actually does help. So let's see. If you have the money and the time, definitely 2100. Amazon is a buy. I am cash because I need for shorting the S&P right now because I would like to buy too. Yeah, I know it's definitely good time to have cash and start nibbling on things. I kind of wish I had a little bit more cash. I made a few plays during this that didn't really do anything, and then I got stuck in them, so they're kind of worthless now. But I unloaded some other stuff, so I've got probably about 2/3 of the amount of cash I would like to have right now. So yeah, I'm starting to deploy too, and Amazon is looking beautiful for that. Because look at this too. Here's the other thing. So yeah, there's thin volume, but if it does come back down here, this 1800 price level held for like 2.5 years. So it's got good support there. The volume profile picks up right there. So I do, and that's not that far down from where we are right now. So even if it drops, I feel confident about my position. I'm not going to lose all that much, and I'm just going to keep adding because I'm looking for a price target of probably about one standard deviation. So at this point, the 27, the high twos, when it does bounce, it could go more than that, but that would be my goal for a trade at least. So we've got 1800, cannot be broken, no way. Amazon, impossible to break that level. Now, I would never say anything's impossible. I mean, you could be surprised by stuff sometimes, but it's definitely a high support level. It's something that because Amazon is such a good company, you're probably right. There are going to be a whole bunch of institutional buyers and large entities that come in and swoop it up if it gets down that low. Because I mean, it's a steal at that point. So yeah, I'm like you. I'm very confident that these like high 1000s, low 2000s will hold pretty well. And if it drops good, I want to get more. I want to buy more shares. So yeah, Amazon's looking good. All right, let's move over to crypto news, and then I'm probably going to have to get out of here in a little bit. We're getting closer to 5 o'clock here. So let's go to Bitcoin/BTC. Now, Bitcoin has not been happy lately. We're starting to get to the point where look at this, we're below the median. Ooh, I like that. And we bounced off of one standard deviation down. What do you know? See, this is why I like these standard deviation channels because I mean it shows you like there's a little congestion when it hits these ones up here, and there's a little congestion down here. And if you look at how how Bitcoin was kind of riding right above it for a long time before it took off. So I like looking at Bitcoin down here. I've actually been buying a little crypto. So yeah, that's kind of what I've been doing. I haven't been making trades, but I bought a little Amazon, I bought a little Tesla, and I bought some crypto. I'm mostly looking at the more popular cryptos like Bitcoin, Ethereum. I have a little bit of Bitcoin Cash and like Litecoin, Doge. I need to get a Coinbase account and get some of the other alts, but I'm mostly just looking in the broad crypto market. So let's see what do you got. You got a prediction of 15K Bitcoin coming on the summer? That was what I was going to talk about. There are some predictions right here that uh, a few predictions actually that it's going down to the 22 to 15K level. So where are we if that happens? So people are predicting. I see why they picked that because that's where things took off. This is an area of support, and if you get down into the teens, you start getting into that really high volume profile. And in fact, yeah, right at about 10,000, we have some serious support. I mean, wow, it's off the charts. That amount of volume is off the chart. It's like one of the biggest volume candles at all. So support would be down there at 10, 15 highly. There's a lot of people that bought in there. And 20 also, what's funny about that 22 level is that's about where I sold when things were coming up. I mean, because everybody that was down, living through the 3,000 days of Bitcoin saw it go from 3,000 to 20K, wondering if it would ever get back up to 20K again. People were excited to get out, like me. I mean, it wasn't the best decision because look at what happened after that. But that is where a lot of shares changed hands right there, that 20 level. So that's kind of where we're heading towards right now. We're at like high 20s where it's been bouncing. That's why I started picking up. Once it dips below 30, I start buying because it seems to bounce from there. And there's like no support right here. So you break this 29 level, you fall all the way down to the 22 level, or maybe 20 actually. I think it's better than 22. And then you got a little support down into the teens till you get to like 10. So we've basically got one little area or two little areas of support. The 20,000 and oh no, I'm sorry, one area. You drop from 20 or the high 30 or sorry. You drop from the high 20s. There's nothing until 20, and then you drop from there, and there's nothing until the low teens. So we basically, if we break this could be a serious fall. So what do you got over here? Let's see. Consumers will start to feel the inflation. No more speculations on Bitcoin. Kids will get out. Yeah, people aren't going to have the money to be speculating on Bitcoin, and as it drops, it's going to be less and less attractive to people. BTC is speculations, not real company. Kids will get out. Their first time meeting with inflation. Yeah, I mean, see, that's the thing right now. The stock market has a lot of fair weather fans, if you want to call them that, but crypto has like most of the people that trade crypto are fair weather fans. Like even the experienced traders don't always like to get involved when it starts going down. So the fact that we're getting into this environment where there's not a whole lot of support and it's been dropping for a while, people hate it. Man, we could see a nice crash, and that's what I'm hoping for. Like I want it to break this gap right here. I want to see it break this like mid 20s gap, come down to about 20, and I wouldn't mind if it bounced off that 20 level, and I think that's actually a pretty good spot to say. But like, it could go into the 15s or even lower. Like when they said 15, I'm thinking they were just picking a random range that looks like it's the top of the old channel. But I'm saying more like 10. My prediction would be like that's the real support is like that 10 level. I mean, look at this volume profile. I mean, it's nothing. There's barely anything in there. So yeah, we're looking at some serious buying opportunities for Bitcoin, which I like, or all crypto really, because everything's tied together. And the other thing is it's tied to the Nasdaq, so the Nasdaq might even take a little bit of a hit. And I was thinking about that, and I think the reason it's tied, the Nasdaq takes hit with crypto is because all these tech businesses are buying crypto, so their stocks are dropping, which means the Nasdaq would have to respond in kind. So therefore, crypto can cause some degradation on that as well. So yeah, definitely the Nasdaq, crypto, all that, they're in a little bit of danger right now. So in the crypto news, Coinbase, they had a terrible quarter, so they're slowing their hiring process a little bit. They're trying to tighten up on money, which will help, should help. That well, it's not going to really do anything for their stock, but it's bullish in the sense that they're actually doing something about it. So it's not the greatest thing. It's like, okay, we're going to just hire fewer people. All right, good. What are you going to do fundamentally? But whatever, we'll just keep that in mind. So that's something. And there's going to be another, let's see, N3 Networks. They raised 60 or 46 million in Series A funding round. They're a blockchain gaming company. They're trying to go public here, so that could, well, I mean, this is a terrible time to go public as a crypto company, and I don't know anything about them, but I did see that they're raising money to go public, so that's something to think about for the crypto market. But yeah, this Bitcoin is looking great. Oh, this is so wonderful. I've been waiting like a year and a half, almost 2 years to get into a buying environment again. Like I haven't been able to buy crypto, I haven't been able to buy stocks. It's all been insane, and so we've had this nice drop, and it's painful, but this is great. Like think about that. Just every time you look at your portfolio and it's hurting, just think about how great it is to be in an environment where you can finally buy again. This has been too long. No, these newbies don't know what they're doing. They're getting out, they're providing the opportunity, and when things start going up, a bunch of them are going to come right back in because that's what they do. They follow the crowd, and that's what we need because we need to be in first, and then we need them to fuel our gains. So that's what we're looking for. Okay, so I think that pretty much covers it. I mean, the big thing I wanted to talk about this week was the market perspective. So let's go right back to that one more time before we close the stream here. Oops, I want to spy. Go to the SPY. We can do this with the volume profile now. In fact, actually, no, I'm going to leave that on there. So like I was saying, if I switch this back to the quarterly level, you can see, I mean, where we are historically. I mean, back into the 90s. We are so far up. We don't get an opportunity like this very often. We are in a wonderful, wonderful place to be right now. This is unbelievable. And if we come down more, great. Actually, if we come down more, that's going to be bigger than the pandemic. Because look at these, I mean, look at the size of these candles. I mean, it's very close to the pandemic. So I mean, this is great. This is absolutely great. I'm so excited about this. Hopefully, we'll all be making a good amount of money as the year goes on. All these other people, they're getting scared. We're getting happy, right? That's the whole thing. Let's be happy about this. So if anybody has any comments or anything like that, any stocks they want to talk about, let's do that real quick before I have to get going. What I've been trying to do actually is trying to create a community of people that talk about this stuff. So if you have individual stocks or things you want to talk about, like bring it to the stream. Let's talk about it. Let's look at the charts. Let's look at the fundamentals, the SEC filings. I want to learn some stuff too. Like I have the stuff that I trade, but I want to trade more stuff. That's why I put that UVIX in there. You're laughing about me going like, oh, this is a scam. Let me put it in my thing. Well, that's what I do. I need to learn about it. Even if it's a scam, that doesn't mean you can't make money off of it. I mean, scams are a great way to make money, actually. You just got to be careful. Like, I love pump and dumps. If you can get in a pump and dump real early and then just get out on that, before everything goes to crap, then you're good, man. I love a good pump and dump. The problem is I don't trade penny stocks anymore, so I don't get those pump and dumps very often. It's usually blue chip stocks just because I know them. I can actually see their stuff. Penny stocks get shady. Like you get the over the counter stuff. They don't have to report in the same way, so you don't really have the same information you have on blue chip companies. I mean, you don't know what they're doing with their money. I mean, they could be doing some really crazy, shady stuff, and they don't announce it until it's already happened, and suddenly, the stock goes from $3 down to 50 cents in a day. And that's it. It's not coming back. So I don't like that kind of thing. But with if you're trading like Ford, or if you're trading General Motors or GE, Coca-Cola, whatever, you're not going to have that problem. I mean, those are all really well-established companies that have to report everything, so you can see their finances, you can see their debt, you can see how much cash they have. So that's why I like that. So, but unfortunately, you don't get pump and dumps. But if you're lucky enough to find one that's good, then make your money on it and move on, man. The way I see it, like everybody's philosophy is so kind of against the markets. There's all this like, oh, I don't like high frequency trading. I don't like all these what is it? Payment for order flow, all these things. No, I do. I love that stuff. And you know why? Because it puts more participants into the market. It adds support to a falling market. Like the people that come in to buy when things drop are the high frequency traders. Like the bottom of the pandemic drop, if it wasn't for the high frequency traders, that could have been a whole lot worse because they come in and they provide support when things actually look good. Because if you don't have that and things start looking good, who's going to come in and provide the support to start the rally? Maybe a large entity will, maybe not. But high frequency traders, they're coming in for different reasons. So they're in there just to make their quick trades, but that allows just enough time for the bulls to start building on that rally. So I really like that. Like if I can make money and you can make money on the exact same thing, I'm happy. Like, okay, maybe I could have made a fraction of a penny better, or more on a share, a few shares of something without the high frequency trading. Okay, big deal. You know what? I'll pay those few, half a penny or fraction of a penny a share to make sure that there are trades available. There's liquidity. One of the most important things or concepts in trading is liquidity. And it's easy to know what liquidity is. It's just the ability to get in and out of a trade. And in definition, but it's so important because if you don't have the liquidity, you don't have price stability. Which is why when I'm looking at options, so let's go over here to the SPY, and this is a good example of high liquidity because the SPY is a very popular um, instrument. I mean, so many people trade it. Let's go to a little bit closer. So let's go to like July, right? The July options. I mean, there are 15,000, 11,000, 12,000, all kinds of volume. Open contracts. There's 15. There's 20,000. There's 30,000. There's 40,000 here. I mean, there's just so much liquidity. So if you want to buy or sell any of these contracts, there are tons available. You can do it. But if you go to like here, let's see. Here's a stupid little penny stock. New Gold, right? Terrible company. They're never going to go up over $2 for. I mean, they might for a little bit, but they're always going to come back down into the ones or into the actual penny stock territory. But look at this. I mean, there's no volume, right? Here's open interest and volume. Zero. Oh, there's one contract. There's been one contract traded in this entire July chain, right? Let's go to the ones that are expiring in June. Oh, there's a few hundred. I mean, but there's nothing up here. There's no liquidity here. So even if you wanted to be bullish or bearish on this stupid stock, you can't really do it very well because there's no liquidity. So you need those buyers in there to support it, which is why I am so happy that there are high frequency traders and everyone in there to keep this market going. Now, I mean, there are problems with that too. Shady stuff can happen. Yes, I know, and like I don't, I think stuff needs to be done about that. Sure, yes, but just the concept of having people there to support the market, keep things up if things go down because I have a long portfolio. I don't want to come in one day and have everything in the garbage and not be able to do anything about it. So, oh, this is New Gold. Look at this terrible stock. This is terrible, terrible stuff. This 49, this was like a joke. This is a misprint right here. It never went up to 49, or if it did, it was some crazy thing in one a quarter. Let's turn this back to let's turn to weekly. Oh, it did. Wow. So it had one crazy weird pump back in 2008. Oh, you know what this was? This must have been a response to the pandemic, or not the pandemic, the Great Recession. This is weird. So this is either a misprint or this was some crazy trade. But New Gold is not going to do that. I mean, it's a terrible stock. Anyway. So the takeaways from today, we're in a great spot. I want to emphasize that. Like I'm very happy. We should all be happy. This is where we're going. We've got plenty of opportunities to make money. There's going to be a bounce at some point, but we've got still some downward momentum, most likely to get through before that point. We'll have to see. I mean, positive news is what'll do it. You can predict anything you want. You can say whatever you want, but the news is really what's driving it. The Fed and the news. So we're just kind of waiting on that. So we just need to be safe. Use your money wisely. If you got some cash sitting on it a little bit, maybe consider picking up stuff you like or getting rid of the things you don't like and moving that cash into the things you do like. Bringing your share your amount of stocks down is a great idea. Some people have a ton of them. If you can consolidate during this time, that's great. Put it more in your high conviction names. That's kind of what ARK Invest Kathy Wood was saying that same thing. That's what she's doing, and that's what you should be doing right now. Grab your high conviction trades or your investments and dump the speculations that you don't care about. I mean, this is the time to do it, even though you're not going to get a lot of your money back for those stupid ones. But it's just better to be in things that you like. It's so much, you sleep better if you're in something that you're comfortable in. Like I used to be in all these random stocks and all these trades, doing stuff overnight with like high amounts of capital, and it just murdered me. I don't have the stomach for that kind of thing. So I wanted to get into things that I didn't have to worry about more, which is why I do swing trades. I don't day trade anymore. I invest and I do swing trades. Once in a while I'll day trade. Like last was a couple weeks ago when you had the rate announcement, I traded the Qs. That was a nice day trade right there. I mean, I was in and out in like 20 minutes or something. It's just I never do that. So I keep it open just in case something like an opportunity comes up. But most of the time it's just swing trades and investments, man. That's my philosophy. Put your money into those high conviction names and just keep going. Be happy we are where we are. So okay, I think that pretty much wraps it up. I'm gonna get going for the weekend. I hope everybody has a good trading week. I have the Discord link and a link to the YouTube in the description. I made a stupid little video to intro it, but I'm going to do some better ones. I'm going to be having some interviews with people coming up pretty soon. It's probably going to be a month or two before those come up, but I want to start expanding the content a little bit. Just to keep the Sunday things going. I also want to start getting a watch list together. So any stocks you're really confident in or things you want to watch, I want to make like a high quality list that I post in the Discord, that we can add to over time. So we can kind of make moves. We can share information, and hopefully everybody can get better at trading and investing because of it. So all right, I am going to head out. I hope everybody has a good weekend. Good luck this week and be safe.